Yes, yes, yes. Yes, yes, yes. What's going on, family? What's going on, guys? Welcome, welcome, welcome to today's stream with your boy, Abel. Super excited to be here with every single one of you guys as usual. Let me go ahead and make sure my face is nice and big for y'all. But what's going on, family? Hope you guys are all having a phenomenal night. I know I'm super excited to be here back live with my family in the building tonight. I was definitely gone over the past 5 days. I wasn't able to be home. I wasn't home. So I wasn't able to even come live with y'all, man. But I definitely missed every single one of you guys that are on live with me consistently here for our Asian sessions. And I'm super excited, you know, to start this week off with you guys. At least from my perspective, I'm just now about to lock in. Huh? Yeah. Right, I'm just now about to lock in. Take a look at the markets, see what has happened over the past 24 hours, 48 hours or so. And really just have some deep conversations with y'all today. Right, because there has been a lot that has happened. There has been a lot that will happen as well, right, to finish out this week. And I think we all need to, you know, be on the same page here. And even not if on the same page, you know, we at least need to have an understanding of the importance of the data that released today and the importance of the data that's also getting released tomorrow. Right? Because today, for those of you guys that were under a rock, we actually had our inflation, right? Our CPI reading today. All right, our CPI data, guys, right? CPI has been one of the most anticipated news events of this entire year. Every single CPI event, guys, everybody's paying attention to. Now, why is that? Well, it's because CPI is telling us how inflation's doing. All right, if we understand, guys, that there's certain things that a lot of these central banks are focused on, right? We know that the one thing that they really have been focused on more than anything has been on inflation, right? The only reason why we have seen an increase in interest rates was to try to combat this runaway inflation, right? So now we just had another CPI reading today that actually was very interesting, right? Like I said, we're going to go ahead and get into all that, guys, today. I feel like we have a lot to talk about, especially since I haven't been live with you guys in the past week or so. I think it's time for us to really get caught back up on the fundamentals, right? And also talk about what's to come, right? What we could expect with tomorrow's news release and what we can expect, at least from my perspective, from my opinion, what we can expect to finish out the rest of this year. You know, because we literally only have about 2.5 weeks left, guys, before 2022 is officially over, which is kind of crazy, right? Am I the only one that thinks that 2022 went by so fast, or am I tripping? All right, let me know in the chats, family. Right? Did your guys' 2022 go by quickly, or was it just mine that it felt like it just flew right by? Right, so let me know what you guys think about that in the chat, guys. Your 2022, was it fast? Did it drag out? What do you guys think? What's your guys' opinions on that? Because I feel like for me, 2022 went by super fast. Like it went by like this, right? You know, so yeah, you know, we're gonna pretty much talk about how we're gonna wrap up the rest of this year. And then also just my thoughts and opinions, guys, on next year, right? And what I think the markets can do going on into next year as well, right? But in between, before we even get into any of that, family, let's go ahead and at least see who we got in the building with us this morning, or this afternoon, this evening, right? This night, depending on where you're tuning in from. All right, so go ahead and drop those locations in the chat, right? Let me know where you guys are tuning in from. I see we got Michigan in the building. We got Ohio. We got Cleveland, Nigeria. All right, let's see, Arkansas in the building. We got Texas, Boogie Down Bronx checking in. What's going on, Sean? All right, let's see what else we got here. Shout out to every single one of you guys for tuning in once again. All right, yeah, I mean, I feel like 2022 went by so fast, it's not even funny. We outside again, right? That's probably why it went by so fast, right? Yeah, it went by, exactly. All right, big shout out to all you guys, man. I appreciate y'all. Flew by just like every year. I hear that, David. It definitely does fly by every single year, right? Let's see. So we got Eastern North Carolina in the building. We got Oakwood, Georgia, Baltimore, LA, Edmonton, Alberta, Canada. We got Cali in the building, Colombo, Sri Lanka. We got upstate New York, the 315 to 518. Shout out to all my people out there in upstate New York, man. I appreciate y'all. I hold y'all a little bit more closer to my heart because that's where I'm from, right? I was born and raised in upstate New York. Shout out to the 518. So yeah, big shout out to everybody that's out there, on this call. That anybody that ever watches any of my streams, any of my videos, from the 518, I appreciate y'all. I love y'all, man, for real. All right, we got Ocala, Florida in the building. We got Cali in the building as well. What's up? What's up? Shout out to every single one of y'all. All right, we got somebody in LA traffic, man. I'm gonna pray for you. Right, but yeah, family. So again, let's go ahead and get into this now, right? And really talk about what has happened today, right? And we're also going to talk about tomorrow, and we're also going to talk about which, I see Eric in the chat. Shout out to you, Eric. Also brought up, we do have, the inflation rate for the pound as well, guys, in just about 4 hours, right? A little bit under 5 hours, right? So about 4.5 hours or so, right? We do got, the CPI, or the inflation rate for the pound as well, all right? And that's going to be interesting to see how that comes out as, because that's 100% going to influence what the pound ends up doing, right? Is it going to gain strength? Is it going to lose strength? We really don't know until the actual data truly comes out, right? But again, it's going to be a very interesting week, guys, just because we do have a shit ton of news throughout the entire week, right? But let's go ahead and start off with what happened today, right? So we did have, guys, again, our CPI come out today. And everything actually is coming out, better than what was predicted, right? They were actually expecting, guys, inflation, right? Regular inflation to come out at around 7.3%, and it came out at 7.1%, right? That is good for equities, right? That's good for the stock market, right? That's good. That's positive, guys, for overall, this fight on inflation, right? We want to see this number, guys, right? The inflation rate. We want to see the core inflation rate continue to go lower. Right, that is the whole goal, right? Again, what is the main objective, guys, of the Federal Reserve, right? Or they have a couple main objectives, right? They want to have a tight labor's market, which is what we have, right? But they also want to make sure that they have, stable prices, right? The reason why they have been going so crazy this entire year and last year was because we have not had stable prices, right? So we're trying to get back to that level, guys, where we can maintain those stable prices again. Right now, we're still pretty high, right? Although we're trending in the right direction, we're still really high, right? We're still above 7%. Now, I got a question for all you guys in the chat. All right, and again, I know all of y'all that have been rocking with me for a while now, you guys know this answer like the back of your hand, right? But I also know we have a lot of newer traders on the call, right, that might have just found out about my channel, right? Big shout out to every single one of you guys that, are on the call that are newer to the stream, right? But the question I got for you guys today, right, and again, like I said, it's a very basic question if you've been paying attention, right? But what number is CPI, right? Or what number does the Fed want CPI or inflation to eventually get back to, right? What is their benchmark number for CPI, right? Like, what is healthy growth, right? What is healthy CPI according to the Federal Reserve? All right, go ahead and answer this in the chat, family. Right, I see we got Houston, Texas in the building. We got DC. What's going on, Oscar? Good to see you. All right, first time watching your live stream. What's going on, Fabulous Forex? I appreciate you for tuning in. All right, hopefully I'm able to provide you with some value for tonight. All right, we got Pakistan in the building. What's going on the side? I appreciate you as well. All right, so yeah, guys, right? So again, the goal number, all right, this is not necessarily where we're eventually going to get to, right? But the goal has always been to keep CPI around that 2.5 mark, right? 2.5%. Right, because according to the Fed, that is a healthy growth, right? That means that every single year, the price of goods and services is increasing by around 2 to 2.5%, right? That's healthy for them, right? That's good, steady growth. We're clearly not there yet, right? We're still not there yet, right? We're still very far away, right? But we are trending in the right direction. Right, and I think the reason that, or the fact that we're still trending in the right direction, guys, is something that we have to take into consideration, right? Because, us trending in the right direction, although it's still going to take some time for us to get to that 2%, that is going to start to bring some optimism back into the markets, right? Over the past 2 years, guys, because of, various different things, right? It's not just one issue, guys, that really caused, the situation that we've been in for the past year and a half, right? But the main thing was, COVID, right? Ever since COVID, we've been dealing, guys, with a very chaotic market, you could say, right? Because there's been so much fear, uncertainty, and doubt as to what is going to happen next, right? But now, as long as we are continuing to trend lower with CPI and we're headed in the right direction, there's going to start to be a lot more optimism entering back into the markets, right? There's going to be a lot of optimism, right? Where a lot of traders or investors are now going to start positioning themselves back in, to the quote unquote riskier assets. Right now, for those of you guys that are in the buildings with me tonight, and I want you guys to answer this question. Give me 1 second, guys. I think my daughter locked herself in the closet. Never mind. She ain't lock herself in the closet. She's just knocking on the door, trying to come in. Right. But like I was saying, guys, right, again, right, whenever we are starting to see hope, okay, or light at the end of the tunnel, investors are now trying to figure out when is it time to, predict when the bottom is coming in, right? Because obviously, when it comes to risk off and risk on assets, during times of fear, uncertainty, and doubt, guys, that's the time to go ahead and go risk off, right? That's when you want to go back into those safe havens, right? You want to go back into the US dollar. You want to go back into government bonds, because during times of fear, uncertainty, and doubt, those are the safest place to do, or the safest place to be at, which is what everybody has been doing for the past year and a half. But now that we're starting to see, again, the light at the end of the tunnel, you can start to see, guys, that shift, right? That momentum shift, that overall shift in sentiment finally start to come back into the markets, right? So these are the things that we have to start to be aware of. I mean, if you guys been on any of my calls this entire year, you guys know that we have been dollar bulls this entire year, because we knew that inflation was still not it wasn't under control at all, right? Ever since I started doing these live streams, guys, on YouTube again, I think back in March, April, or May, I can't even remember when we started doing these, but we've been riding out the same trend this entire time. But now, and again, I'm not saying that the overall sentiment shift is going to happen just yet, but you're going to have to start considering it, right? Because we're starting to see, again, CPI trend lower. And we are still very much so, right? The Fed is still planning to continue to raise rates, which is going to continue to send CPI much lower. Okay, because the reason why interest rates are going up is because it's making the cost of money to go up, right? Whenever we see interest rates increasing, that is literally saying that the cost of money is now going higher. And as the cost of money goes higher, nobody wants to go ahead and start to, get money, right? They're pretty much literally killing the demand by increasing interest rates. Right now, again, this is the thing where I'm getting at, guys, right? And I might be talking a little bit prematurely, right? But this is stuff that we have to start to consider in the future. Now, for me personally, I'm still very much going to be riding out risk-off sentiment for the time being. Long-term, right? Bigger picture look. But I will also start to consider the fact that all of these things are starting to line up, and we probably will eventually have some type of a pivot sometime soon or sometime in 2023. Now, if the Fed fully decides to pivot where they completely stop raising rates, then you best believe everybody is going back to risk on assets, right? A lot of big time investors, traders, hedge funds, right? They're already going to start to position themselves, guys, for the fact that we're going to go from a hawkish Fed to a dovish Fed, right? These are conversations that you really should be having with yourself or with other traders as an aspiring Forex trader. Because when you really start to get a grip of what's really happening, guys, from an economic standpoint or just a fundamental standpoint, a sentiment standpoint, it's going to put you in a much better position for sure when you're doing your technical analysis. Okay? So this is stuff that we have to be, we just have to have conversations of. And this is stuff that, again, I've been talking to you guys about easily for the past 8 months. And I'm going to continue to speak on this stuff, guys, literally for the rest of my trading career. All right? Because I truly understand the power of fundamental and sentimental analysis. All right? I understand that fundamentals is and the sentiment behind the fundamentals is the driving force behind long-term moves in this market. I understand that, right? Like completely. So that's why it's important just to really be aware, guys, of the things that could really potentially happen, right? But that's what happened today. You know, we actually had inflation continue to go lower and lower and lower, which is a positive thing, right? Which is a positive thing. But there's the next thing that we also have to understand now, right? Yes, we're seeing CPI go lower, but what is the Fed going to do tomorrow, though? Right? Because not only did we have our CPI reading today and this week, but now we also have tomorrow our FOMC economic projections, our federal interest rate decision. Just know tomorrow is also going to be a very, very important day for us Forex traders to be aware of. Right? And it's not even necessarily, guys, the interest rate decision, right? Because I'm fully convinced that they're going to be raising rates by 50 basis points, right? In fact, the market has already been pricing in the fact that they're most likely going to raise it by 50 basis points. So the interest rate decision itself is not going to be the shocker tomorrow, right? What's going to be the shocker tomorrow is going to be the FOMC economic projections, okay? The projections itself, guys, is really going to give us an insight as to what the FOMC committee is actually planning on doing, or what they would love to actually do, right? While everybody's going to try to trade the interest rate, me and my team, we're going to be really trying to read the projections, right? So that we can truly understand what the Fed is thinking, how the Fed is thinking, so that we can position ourselves with what the Fed is, right? We can position ourselves in a way that we can take advantage of anything else that the Fed eventually ends up doing, right? Because the summary of economic projections, guys, is literally the blueprint, right? It's literally telling us exactly what they're expecting interest rates to do. They're going to be telling us exactly, right, how they're going to be dealing with inflation, everything. Right, so that's something that we have to be mindful of. Is more so, even more important than the interest rate, is the actual economic projections that come out after the interest rate decision. Right, so that's what we're going to be doing. And in fact, guys, tomorrow, you know, me and the team, we will be live tomorrow as well. You know, trading that live with y'all. Right, and again, it's not even necessarily to, you know, press the button and open trades, but it's more so to get some clarity as to what the economic projections are. So if you guys are free tomorrow, 2 p.m. Eastern Standard Time, we will be live, right here on YouTube, right in our Profit Society YouTube channel, and we will actually break down the sauce real time, live with you guys, right? Really showing you guys the actual report, and really just trying to create a sentiment overall, like a real feel as to what we can expect the Fed to do moving forward. All right, because we all know that this market, guys, is leading, right? The markets overall, they're forward thinking, right? So we also have to be forward thinking as well, so that we are not on the wrong side of this. Okay, because when I think about, you know, and the big thing here, guys, and especially on YouTube, right, is smart money concepts, right? But when I think about smart money concepts, I don't think about it from a technical perspective, right? Because that's, and again, this is just me. When I think smart money concepts, I don't think about it from a technical perspective. I'm thinking about smart money concepts or smart money theory from a fundamental perspective. Why? Because the institutions, guys, the real smart money, they're making decisions based off the economic projections, right? They're making decisions based off CPI, right? Real smart money is making decisions based off the hard data and the sentiment around that they have around that data, right? It has nothing to really do around technical analysis at all. So that's why it's very important for us to really dive deep, guys, and understand exactly what's happening from a fundamental standpoint. That's the real smart money. That's where real smart money's playing. And then we use the technicals just to find entries for us to align with what the bigger picture is telling us, right? Is this making sense, family? And big shout out to you, BTC Mommy. I appreciate you so much for that $10. Let's go, let's go. Thank you so much for showing love. Thank you for being a supporter of the channel. And if you have anything you want analyzed, any questions, comments, or concerns, by all means, you know I got you. Go ahead and drop it in the chat. And yeah, thank you so much. Right, but I want you guys to be aware of this, guys, right? It's going to be very interesting for sure over the next couple of days, right? But that's pretty much what we have to deal with, right? We have, again, FOMC economic projections. We have the interest rate decision coming out, and the press conference that's also going to follow. which we will all be live tomorrow, right? 2 p.m. Eastern, to literally analyze that entire thing together, right? And hopefully you guys are able to get a lot of valuable insight from that, all right? Because I truly believe, okay, I truly believe that the missing component for most traders is a deeper understanding of fundamentals, right? I truly believe, right, what's missing for even 99% of you guys on this call tonight, right? And I'm talking to you, right? Especially you right there that I'm looking at. If you have been very good with technicals, right? If you feel like your technical analysis game is up to par, but yet you're still not making no consistent money from it, you're missing a couple key components that could really change it up for you, right? And those key components are, again, understanding of fundamental and sentimental analysis, right? Two of the most slept on things, which everybody knows how important fundamental is, but nobody really uses it because nobody understands it, right? You know what? We want to make sure that you guys understand exactly how to play this so that you guys are positioned in a way to actually win, right? Now, how many of you guys in the chat finally want to see some results, right? Go ahead and drop some threes in the chat, right? How many of you guys in the chat finally want to go ahead and have that breakthrough? And how many of you guys have been having that breakthrough, right? Go ahead and drop some threes in the chat for that, guys, right? Because I truly believe an understanding of the sauce that I'm talking about right now is literally the game changer for you guys all. I can almost guarantee it. Right? I say it with confidence, guys, because I know what understanding fundamentals did for me. Right? I understand what understanding sentiment did for me. Right? Like, it completely took my trading to a completely new level. Right? Before I started implementing fundamental analysis, I was doing good with just technicals, right? Like, I left my job off with just technicals because I made a shit ton of money back in 2017, 2018. I had a phenomenal trading year, right, which allowed me to leave my job. But once I started to add fundamentals last year, it completely just took my trading to new heights, right? And that's pretty much what we got to get to, right? We got to get to this next level understanding, guys, of every aspect of trading. And it's just going to take your trading to a whole other level completely, right? But even before that, guys, right, even before we even see, you know, any of this inflation, you know, we do got, you know, GBP as well, right? We also have CPI data for the pound coming out. And this is also going to be interesting, right? Because the pound has been getting destroyed, right? Like, the pound itself, guys, and I'm not talking about from a currency standpoint. I'm talking about in terms of, you know, their inflation over there, right? Their CPI. Theirs has just constantly went up and up, right? Their CPI right now is at 11%, guys, right? Which means the change in the price of goods from last time, all right? They actually measure. Let me actually see when their last CPI reading was, right? When was it? It was in November 16th, right? So just under 30 days ago. 11%, right? So literally the price of goods and services over there, guys, in the UK, right, has literally gone up 11% year over year. That is insane. Right, that is going to cause a lot of hardships, right? So depending on how this actually comes out tonight, right, which in about less than 5 hours, it can really, really cause a lot of strength or a lot of weakness to the pound. Okay, anything above what's forecasted is going to potentially strengthen the pound and weaken the equity markets over there in the UK. Let me say that one more time, right, because this is important. Anything above 10.7%, right? Anything above the forecast is probably going to strengthen the currency and weaken the equity markets over there. Okay? Let me break this down. Very simple. High inflation is going to weaken the stock market over there in the UK, the equity markets over there in the UK. High inflation, weaker stock market, right? High inflation, stronger currency because everybody's liquidating their assets from the stock market over there, and they're putting it or converting it into the currency, right? The pound. So above 10.7%, we could see potentially weaker equities over there, stronger potential pound. Now, if it comes out lower than 10%, which is what's forecasted, then the flip side can happen, right? We could see some optimism, and we could see a bounce in their equity markets, and we could see some weakness in their actual currency. Okay, this is a big misconception that I have, guys, when I first started trading, right? I used to think that any positive data that will come out would give, you know, a positive return for everything, right? Everything across the board, right? When I'm saying a positive return for everything, I'm talking about a positive return. Positive data is going to give positive, a positive return on the stock market, right? But then I also thought positive data is also going to make the currency stronger as well. And at times that does happen, right? At times that does happen. But more times than not, guys, it's one or the other, right? If the stock market is gaining strength, then the currency is losing strength, right? If the currency is gaining strength, then the stock market is losing strength, right? Because people are taking their assets or their money from the stock market and converting it back to fiat and vice versa, right? When it's time for risk on, right? When there's a lot of optimism in the markets, people are going to take their currency and they're going to convert it back into the stock. Right? So you have to understand, guys, how this really plays out from a fundamental perspective, right? Because if you're just now learning how to trade and you come to, say, one of these news calendars and you're trying to figure out exactly what's going on from these news calendars and you're trying to say, hey, man, this is positive data that just came out. Man, let's go ahead and buy the pound. More times than not, you might be on the opposite side of that, right? Because positive data is going to benefit the equities market, not necessarily the actual currency itself. Okay, now, I don't know if I was the only one that was confused about that, but I know I was confused, guys. Like, my first 3-4 years of trading, I was completely reading it the completely wrong way. And that's probably why I never really had no success trying to trade news, because I was reading it completely wrong, right? So it's a lot of things like that, guys, that we really have to come to terms to and really understand with, right? But that's what we got to deal with, going into tomorrow, all right? Going into tonight for the pound, but also going into tomorrow for the FOMC and the interest rate decision overall, guys. Now, again, I am expecting them to raise it around 50 basis points if we're talking back to the U.S., the Fed, right? So if they come out 75 basis points again, I don't see that happening, but that's really going to spook the markets again. All right, that's going to probably spook the markets, right? And if they come out at 25 basis point, which I doubt 100% is going to happen, then that's probably also going to spook the damn markets, right? I think the safest thing for them, guys, is to only raise it by 50 basis point and then just, take it month by month to see what happens, right? But this is the last meeting that the Fed has until the new year, right? So it's going to be interesting to see what that actually ends up coming out as for sure. All right, but let's see. I became funded once I understood all three aspects, still learning, but sheesh, is definitely valid. Let's go, Devin. I appreciate you, bro. Shout out to that boy Devin, man. Really, really has come into himself when it comes to trading, and it's been amazing to see you grow, bro. All right, absolutely amazing, right? Let's see. Destroy the like button for Abel. Great Nas. Appreciate you, Assad. All right, yeah, family. If you guys are getting some type of value so far off of just this fundamental breakdown, definitely go ahead and just show me love. Show me love by simply smashing the like button, right? It definitely does a lot more than you might think, right? It's a simple gesture of just literally hitting the like, even if you got to get out of the video to smack that like button, definitely do it for me. It just does a lot for me. It does a lot for this channel. It tells YouTube that you guys are enjoying this value. And as long as YouTube sees that you guys are enjoying the value, they're going to go ahead and, show me some love too. They're going to show this, this video out to a lot more people, right? And that's the whole goal, right? So I appreciate every single one of you guys that do take out your time to go ahead and, like the stream. All right, but let's go ahead now, guys, right? I know you guys don't want to just hear that all day, right? But let's go ahead and get into the actual markets now, right? And see what has been happening and what we can expect overall, guys, right? In my opinion, for the rest of the year, right? Because I think we're at a very interesting point, guys, in time where the market itself, it's at a decision point, right? Where, again, right now, it's really waiting to see a few different factors, right? We've seen the CPI data. We've seen that start to come down, which is really, really good, right? Which is also a big reason why we've seen the dollar itself, guys, lose a lot of value today, right? It ended up being very, very weak. In fact, we've been weak, since September, right? We have just starting to see this thing, genuinely just go lower and lower and lower, right? And it's because, again, we are seeing inflation slow down, right? The reason why the dollar was on a tear, guys, all year or for the past 2 years was because we had runaway inflation, right? But now that we're starting to see the light at the end of the tunnel, we're starting to see all of this market finally reverse, right? And, again, CPI came out good, right? We've seen CPI came out lower, which is great for equities, technically, normally, right? And it was negative for the dollar. Now, this is where I'm at, right? I believe, and again, I could be wrong, right? But I believe long term, yes, right? We will eventually see this thing continue to go lower at this point, right? Especially with how the data has been coming out, right? Especially with how inflation has been. I think there is a very good opportunity, guys, for us to continue bearish, right? But that's more, again, long-term thinking. Short-term thinking, right? Going into the rest of the end of the year, I personally would not be surprised if we do start to see this thing actually catch some type of strength, right? Like, again, this is just for me going into the end of this year. Now, again, this could continue very much dropping, right? And I wouldn't be surprised. But just looking at where we're at, I think there's a very good chance, guys, where we do start to see this market finally give us some type of a correction here. Because like I mentioned, we have been bearish, guys, literally since September, right? We also seen a nice increase in bearish momentum even back at the beginning of November, right? Ever since then, though, we have been very, very choppy, right? We have been going lower. We have been creating a series of lower lows and lower highs, but we're extremely, extremely choppy in nature. Look at this price action, right? Like, just compare, right? Compare this big drop right here to this choppiness, right? So we're getting signs, guys, that momentum is slowing down to the downside. Overall, slowing down, right? Even with this, good reading in CPI, right? That was a very good reading today, right? And although we did end up bearish, it's nothing crazy, right? We're not seeing no very big bearish candles at all. We're not seeing that whatsoever, right? So I'm getting to a point now, guys, where I'm starting to take into consideration of the fact that, man, maybe we actually could finally find some strength again. Now, obviously, it's going to depend on what happens tomorrow, right? Depending on the actual, again, the summary of economic projections. That's definitely going to play a big role into this, But even what they do with the interest rates, right? All that stuff is going to play a role, guys, for sure in the markets, right? What's wrong with baby girl? All right, give me 1 second, family. We got a little mama in the background. All right, so again, this really does depend, though, on what happens tomorrow. Not necessarily with the interest rate, again, because the interest rate decision, guys, the 50 basis point, that's already pretty much being priced into the markets, right? It's more so the summary of economic projections, and it's also going to be the press conference that follows that, right? Whatever Jerome Powell says at 2:30 p.m. Eastern Standard Time is going to influence what these currencies actually end up doing. Right, but I truly believe that we could be getting to a point now where we do see this thing finally rebound and potentially go bullish. Right now, if we actually look at the MACD, guys, right, which I don't really use too many indicators. Right now, if I do use any indicators, it's more so this one right here, this market structure indicator that I use now. At times I'll throw on the 50 period moving average as well. Just like it's a nice tool as well to be using. But when it comes to, identifying momentum, right, or volume behind certain moves, my indicator of choice is definitely the MACD, all right? I love the MACD. I think it's probably one of the best tools to use, especially if you want to know how to read volume or momentum, comparing it to, candlestick pushes and things like that. It's absolutely next level. So even if we look at the MACD, guys, right, we can see, right, that the bulk of the selling was all the way down here. Right, but that also lines up with these big candlesticks as well, the ones that I just mentioned, right? So we've seen a lot of selling that happened, right, all the way up here. But look at now, right? Although we've been creating these lower lows, right? I mean, let's just, look at this, right? We create lower low, lower high, lower low, lower high, lower low, lower high, right? Even though we're still creating these series of lower lows and lower highs, we really don't have that much volume behind those moves at all. Right, like nothing, right? In fact, this last bearish daily candlestick, guys, it's actually showing as a bullish volume bar, right? So we're showing, guys, that the momentum is also really starting to slow down, right, when it comes to this bearishness that we've been seeing. Okay, so I think that, again, there could be a very good chance, depending on what happens tomorrow, that we do finally start to rebound and see higher pricing. Right, I think there's a very good chance that at the very least we come up and run this area of liquidity right here, right? We have a lot of money. We have a lot of money up here, right? We have a lot of liquidity positioned up here, right? Right before this imbalance, right? All of this inefficient price action, these imbalances, right? I think that this is a phenomenal area that we can definitely go ahead and target into if we do finally find some bullishness here for the dollar. Okay, so that's just something to keep in mind. All right, I don't know how you guys feel about that, but from me perspective, guys, I think that it is getting to that point. Now, I want you guys to go ahead and let me know your guys' thoughts in the chat. Right, I know we have a lot of phenomenal traders in the building with us tonight. Shout out to all you guys for sure. But I want to know you guys' thoughts and opinions. Right, do you guys think that we're still going to remain bearish? Do you think the dollar's, in due time going to go ahead and go back bullish? Right, like what do you guys think? Right, because for me, I think we're damn near about ready to go back bullish. Right, I truly believe that. Right now, let's go ahead and combine what I'm saying right now to also what I already spoke about. CPI. Right, inflation is at 7%. That's nowhere near that 2% level, right? Which means the Fed is still planning on raising rates, right? And again, although tomorrow they're only raising it by 50 basis points, they're still planning on raising rates, right? And as long as we have a hawkish Fed, right, which hawkish just means that they, whenever you hear people say hawkish and dovish, which is going to be terminology you guys hear often, right? Hawkish is pretty much signifying that the Fed is more likely to raise rates than not, right? And dovish is the opposite, right? Where the Fed is actually lowering rates, so on and so forth, right? But as long as we have a hawkish Fed, then long-term, guys, we should expect dollar strength. That's just how it's been, right? Ever since the Fed started raising rates, the dollar has been on a moon rise. And I think now that we had this type of a deeper correction here, and I think now that we also see, even though we are starting to see softer CPI, the fact that we're still very far away where the main goal is of 2%, right? They're at 7%. We're supposed to be at 2%. That's a 5% spread. So the fact that we're still so far away, though, and the fact that we're still very much hawkish in terms of the Fed, where we know tomorrow they're definitely raising rates. I believe the next 2 or 3 CPI readings in 2023, they're also probably going to raise rates. Whether it's 50 basis points or 25 basis points, that's another discussion once we actually get to that point. But the whole thing is they're still planning on raising rates. So that's why I think, guys, we could realistically start looking for opportunities to go back bullish here. Okay, so that's going to be my bet going into the end of the year, is that we actually start to find a bottom here and we end up going back bullish. Okay? So I'm playing that, in my opinion. I would love to play that. All right, I would love to play that strength to come back in, just because, again, now what else is the market going to play? Right? We're already seeing CPI go lower. We're already seeing what's going to happen tomorrow. We'll eventually find out what happens tomorrow. Right? And that's how I'm positioning myself from a technical perspective. Right, so let's go ahead and go down lower time frame now and see what we really are seeing here, right? And see if there's anything that stands out to us, right? Anything that we could potentially take advantage of. Anything that, and I'm gonna be honest, there's really nothing as of right now that's standing out in terms of structure to the left, right? Yeah, we're at this low right here, this extreme low of this range that we have here, right? We have wrong tool. We have this range, right? This little higher low, higher high sequence before we continue. So yeah, we are playing at a level of structure, right, that could potentially hold, but it's not nothing too crazy, right? Like, it's not a major level of structure, guys, that ultimately swipe lows, right, that might have grabbed liquidity before. Like, it's not a real strong low right here, right? So that's just one thing that I'm definitely keeping my eyes on, right, is the fact that, yeah, we're stopping at a level of structure, but it's not nothing of significance, right? But we'll still keep our eyes on it. The next thing that I'm also paying attention to, right, is what actually eventually happens here, right? Because we are coming out, guys, and we are starting to form, again, this little, descending triangle pattern, right? Which is showing us that the momentum is starting to slow down. So what I'm looking for here, guys, right, on the dollar itself, I really want to see how we actually react, or if we're able to actually go ahead and really break above this level right here, right? I'm going to go ahead and change this to a red so you guys can see it. But I'm very interested, guys, to see us actually go ahead and really break above this level right here, right? This 104.15, right? 104.15. You know, if we're able to go ahead and clear that level, then I think there's a very good chance that, you know, that level actually does hold and we eventually end up breaking out to the upside, right? We go ahead and we start to run and break this trend line here, you know, that I pretty much just created just to show you guys pretty much the pattern overall, right? But I think if we do end up closing above this 104.100, 104.150, that we do see continued strength overall. Okay, that's just my opinion now, right? I could be wrong, I could be right. I don't know. I don't really care, right? It's all, I mean, this is just predictions anyways, right? I really don't care about, you know, the predictions, right? Because I like to react to price anyways. But that's what I would like to see. I would like to see the market eventually run this level, right? That we've been stuck at for the past 7-8 hours, right? We've been here for a little while now, up at these levels, right? Literally for about around 7 to 8 hours or so. But if we're able to go ahead and see this run, then I will be waiting for it. And I will be expecting continuations higher. Right now, from a smaller perspective, right? What really could happen before we even run this high right here, because this high right here now is just simply building up a lot of liquidity. Where's my tools? Let's see. Yep. This right here, guys, is now just building up a lot of liquidity, right? So even before we even see that happen, right? Even before we end up breaking that, right? Because we are going sideways right now. You know, there has to be liquidity grabs before then, right? So what I think could happen realistically is that we actually see the market spike down first, and then we actually go ahead and break higher. Now, why the spike down? Probably just to go ahead and capture this liquidity right here, right? Again, the market, guys, before it makes any major move, right, it's usually going to do some type of a grab of liquidity first, right? So we have this little trend line right now, guys, that is just strictly building up liquidity right now. Right, we have this trend line right here, right? Every time we, you know, create these higher lows, we have to assume that more orders are being entered, right? More orders are being placed, more buy orders are being placed. So all these little higher lows that are doing, in my opinion, of course, I think it's just building up more liquidity, right? Whenever we see price going sideways, there's two things that are happening, right? Price is creating liquidity, aka building liquidity, what I like to say, right? Or it's going to eventually create, you know, the take of liquidity, right? It's either creating liquidity or taking liquidity. So I think we do see this thing eventually run lower, go ahead and take that liquidity before then we eventually see that move to then go ahead and go higher, right? So that's my guess. That's my bet. I'm playing in that, and that's how I'm going to be playing it. Now, again, keep in mind, guys, right? And I just got to be transparent with y'all. I'm probably not going to be trading too much either way, all right? I am giving you guys these ideas. I'm giving you guys these predictions and these projections, guys. But you have to understand, like, I'm normally not going to be trading anyways, right? Just because of the time of year it is, right? Like, yeah, you can trade at any time of the year you want. It's very possible for you to trade during December, right? But market conditions change. I don't care what anybody's tell you guys, right? Market conditions change, guys, depending on the season of the year it is. Right, and just like at the end of the year, in December, market conditions also change, and they do get extremely, extremely slow. There's usually less volume, and it causes it to be very, very choppy markets overall. Now, that's not to say you can't trade. You can do whatever the hell you want, right? It's your account. But myself, it makes no sense for me to actively trade as aggressively as I normally do, especially when I already had a really, really good year. Right, I had a phenomenal trading year, right? I don't want to give back nothing crazy or nothing too much back to the markets, right? So these are things that, again, we also have to be aware of, guys, right? Deciding when to trade and when not to trade is also a very, very important part of this entire journey here. Does it make sense for us to really try to force trades during the holiday season when we know there's not as much volume, when we know most traders are not going to be trading, when we know there's probably going to be a lot of craziness that we see? Probably not, right? You know, so again, if you do decide to trade, if you do, because I know a lot of y'all some savages, right? Y'all can hear me say this all day long, right? And y'all still gonna wake up tomorrow or even in the next hour and still do your thing, right? Which again, listen, do your thing. It's your account. Just lower your risk. If you are still planning on trading, like for me, guys, right? If I do take any trades for the remainder of this year, it's going to be me risking 0.5% every single time, right? Lower your risk. How much are you normally risking? Cut it in half, right? I normally risk around 2% per trade. But because I know that normally I don't want to even trade during this time of the year, I'm only going to be risking 0.5%, right? So I'm not just cutting it in half. I'm cutting it even, I'm cutting it in half of the half that I just cut it, right? So that's just something to keep in mind, guys, right? I'm going literally only 0.5% if I do take a trade throughout the rest of the year, okay? So that's just where I'm at with that, guys. But it's something that I would not be surprised actually happens here in the markets, like at all, right? I wouldn't be surprised if we do spike down and then go back bullish. So let's go ahead and take a look at EU now, right? Since this is our play here for the dollar, EU is going to be very, very, very easy to read, all right? In fact, I already do have somewhat of a setup up here, guys, that I'm going to be looking at. Or, like I said, if I do take the trade, if I do, all right, it's going to be 0.5%. And I swear to everything I love, I am not playing around with that, okay? So, with that being said, yeah, there is a potential opportunity here, especially if we do think that this could be potentially the high, right, of this move, right? Because right now, again, let's go back to the bigger picture here for the euro, right? We have been extremely bearish all year. We have just seen a nice relief period, okay? We had a nice relief period right back up into a nice level of structure. So, if we are considering this move up here to potentially be the high of the market, then yeah, I think that this move up here, a nice entry up here around this 1.066 could be an absolutely great time to look for some trades. All right, so that's what I'll be looking at, guys, to see how the market does play out.
Showing some love, thumbs up, medium light skin tone.
Medium light skin tone. Let's go, Tyson. I appreciate you, brother, for the $9.99. Let's go. Thank you so much for showing love, man, and supporting the channel. You have been doing it for a while, too, my brother. I appreciate you. So if you have any questions, comments, or concerns, or specifically any currency pairs that you want me to analyze, definitely go ahead and drop it in the chat, and I'll do that as soon as you drop it, guys. Just so you guys know, for anybody that does support the channel, that sponsors the channel with any type of a super chat or any donation, you get priority, right? You get priority. It doesn't matter what currency you want to analyze, any questions you want, you definitely get the priority because you simply sponsor the channel, right? And I got to show love to all my sponsors, right? So I appreciate y'all for showing love for sure, right? Yeah, Tony, that was funny as hell, right? Showing love, showing some love, lights going thump. Right, but yeah, big shout out to you, Tyson. I appreciate you, my brother. Right, so now back to what we got here for EU. All right, looking at EU, guys, yeah, I do think that there is a very good chance that, we get an opportunity here. All right, we get an opportunity. I think that we do see the market eventually come up and really run this resistance right here, right? This resistance, guys, is literally probably just building up a ton of liquidity, right? And again, this is the thing that most traders struggle with, right? Identifying levels of resistance that are valid, to take trades from, and other levels of resistance that are there simply just to trap you in the markets, right? It happens all the time. That's why, for me, guys, whenever I'm looking at a level of and this is a gem, write this down, guys. This is a bar, right? Whenever I'm identifying a key level of resistance or support or supply and demand, wherever the case may be, I'm making sure that I'm not taking no trades unless it's at the extremes, right? It's either at the high of the range or it's at the lowest point of the range. All right, that's just like the easiest way to avoid these type of fake outs, right? Because I'm pretty positive, right? Like there's probably like and obviously, again, I could be completely wrong, right? But there's 1,000% chance, in my opinion, that we run these highs right here. All right, I again, it's just from my perspective, right? That this high right here, guys, is simply a high that is creating liquidity. Remember, we're either creating liquidity or we're taking liquidity, right? I think this high right here is simply doing just that. It's simply just creating liquidity, right? So do not be surprised for anybody that is going to trade London session, right? Shout out to all my London session traders. That is not me, all right? I do not wake up during London. I'm sleeping. I'm in bed. I'm cuddled up next to my wife. And you know what I'm saying? I'm chilling, right? I don't trade London session like that, just because I like to sleep. But for anybody that is trading London session tonight, right, do not be surprised if we see something like this, right, where we see the market come, it's just playing around these levels, and then we see the nice sweep of the highs. Hopefully it gets all the way up into here, and then by New York session, we see that New York session reversal, and then we go ahead and we start to see this thing go much lower, right? So that's pretty much what I'm thinking can actually happen here, guys, for EURUSD. going into tonight and into tomorrow morning, right? And then eventually, obviously, leading into the actual news that we gotta play, right? But I think this is a very, very possible play here now, right? That we can actually take advantage of for sure. Right, let's see what else. Let me actually go ahead and catch up with the chat real quick. I appreciate y'all for commenting as well. All right, let's push the like buttons. This guy's a try. I appreciate you, Martin. Definitely appreciate you for sure. Let's see, we'll be bullish on dollar and bearish on gold. Yep, I'll take a look at that for sure. Shout out to my little bro, Danny. I see you in the building, my brother. What's going on? Let's see, February 4th, Dixie bullish impulse start. The market is approaching discounted price at 102. That's a nice breakdown for sure. I'll definitely look at that pricing too as well when I go back to the dollar. I got you. Right, I see we got Jamaica in the building. What's up? What's up? When do you plan on getting back into the markets like you had been, right? That's a great question, right? So usually, I mean, right at the beginning of the year, right? Probably around, not beginning of the year, right? But probably like right around middle of January is when I'm probably going to really go back to, risking my full amount, right? And again, it's just trying to avoid, guys, all these holidays, right? Where all these holidays, guys, like professional traders are usually not sitting behind computers pushing buttons, right? Let's be real, right? Especially for a lot of these hedge funds. Although these hedge funds nowadays are all traded through AI and robots and stuff like that, some of them still have actual humans pressing the buttons, right? But those humans, you best believe, especially if they're worth a shit ton of money because they are the button pushers, they're not sitting behind the computers during the holiday season, right? Most professional traders that I know, guys, right? Especially the most successful ones, like right now, they're on vacation, right? They're on holiday, right? They're chilling. They're taking time off, right? They're in Greece. They're in all different type of places, right? The last thing that they're doing is really sitting behind computers all day trying to push buttons, right? So it's just different perspectives to understand. But I would start to go back to my full risk of 2%. Probably around mid-January, all right? Right after holidays is over, and then we're getting back into the swing of things, right? So just to answer your question, I'll go back to my full risk, which is only 2%, back in around mid-January. From now until mid-January, if I do take any trades, it's going to be 0.5% every single time, okay? Let's see what else we got here. Please, God, about gold long term. Yep, I got you. I'll take a look at gold Assad for sure. All right, let's see. A quarter risk. Yeah, quarter risk is also perfect, 80. Again, the lower the risk, the better right now. Right? The lower the risk, low key, is probably not a bad bet, right? For sure. All right, let's see what else we got here. Look at AUD/USD. Look at gold. Can you check out Prophet Society? I shared my chart. Yeah, for sure. I'll take a look at that also, right? Anybody that definitely shows love in the Prophet Society, I got y'all, right? I'll take a look at that as well. All right, let me go ahead and just make sure that comes up. Yep, I'll take a look at that for sure. Right, so this is my bias here, though, guys, for EURUSD going into tonight. I think it could be a very good play. I really just want to see, again, the market come take this liquidity right here, this buy-side liquidity. BSL stands for buy-side liquidity. We also have some buy-side liquidity up here with these equal highs. So I think we're going to run this high, and I will also like to run this high up here. Technically speaking, guys, the market really could just react from right here if we really wanted to be honest, right? It really could, right? Right here, this area of supply that we have right here that was created right before this little equal high, the market could also play right off of this level, right? It's also very, very possible for this to happen as well, but if that happens, then it is what it is. I'm really not going to chase it, right? But it could happen, right? I'm only bringing it up because, again, it is a very good possibility that we just run this high right here as well, and then we shift from right here, right? We hit the supply zone that we have there, and then we just shift lower. But for me, I just really like this higher play up here, right? I really want to see both these equal highs get completely demolished, get back into some of this wick up here, and then from there we go ahead and we go lower. Now, just look at the risk to reward that we have here, guys, right? If there's one thing that I truly believe is the golden nugget or the secret sauce to trading, right? If I truly think, if I believe there's a secret sauce to trading, right? And I shout out to y'all too. I keep on liking the stream, and I appreciate y'all so much. But the one secret gem or the secret nugget of trading, in my opinion, is understanding risk to reward, right? Risk to reward, guys, is the absolute game changer. Like, it's the absolute game changer, and I feel like it's the difference maker in people that are profitable and not profitable. right? Again, I know for me, guys, I really hold risk to reward to the highest levels of standards, right? I think risk to reward is as important, as everything else that we have to deal with, right? But understanding how powerful, having a great risk to reward is can really take a lot of the nerves out of the whole equation. It could take a lot of the emotions out of the equation for you, right? Because when you understand, guys, that having a simple 1 to 2 risk to reward or a 2 to 1 risk to reward, all you got to do is be around 50% accurate and you can still make a shit ton of money. That's a powerful feeling. That's a powerful understanding, right? Because most newer traders, they come in and they do what? Right? Most newer traders come in and they want to win 100% of their trades, which we know is impossible. You're not going to win 100% of your trades. I don't care who you are. I don't care how you're trading, right? Whether it's manual trading or trading with a bot, I really don't care. You're not going to win 100% of your trades. It's impossible, right? In fact, 90% accuracy is damn near impossible as well. Let's be real here, right? Having a 90% accuracy for a long period of time, guys, that's very tough to do, right? But again, that's the target that most people have for themselves, right? Most newer traders, they come in and give themselves unrealistic expectations, thinking that they're gonna be, the person that defies the odds. Right? That's not how it works, right? See, but being 50% accuracy, right? Having a 50% accuracy, that's actually very possible, right? Having 60% accuracy, that's actually possible. 70% accuracy, that's possible, right? But going into that 80, 90%, 100% range, that's very, very hard to do, right? And if you're coming in the game, guys, and you're not consistently profitable just yet, but yet you're trying to be 80 to 90% accurate on your trades, you're only causing a lot more harm to yourself than anything, right? It's very, very hard to do. That's why risk to reward is so important, right? And I really say this, and I want to say this, guys, with and I say this in the nicest way possible, right? And I know it might not look it, but F win rate, right? I'm not gonna curse in general just because I don't know who's on the call, but I'll write it. This right here, right? F your win rate, right? F your win rate. And again, if I have some kids, some younger kids on the call, I'm sorry, but you got to grow up someday anyways, right? But F your win rate, right? Stop focusing on your win percentage so much. It's not even about that, right? F your win rate, right? Focus on risk to reward. All right. Let's go with risk to reward for the win, right? This is the game changer right here. Risk to reward for the win, right? Fuck your win rate. Excuse my language. I mean, we're all grown here. Risk to reward for the win, right? This is how it's done. Okay. We don't care about the win rate right now. Again, as you become a profitable trader, there's going to be little tips and tricks and things that you can do to improve your win rate. But right now, don't focus on it, right? Focus on having proper risk rewards for every single trade that you take and just watch what that does for you, right? It's going to change the game for y'all. For real, it really is. All right, let me go ahead and catch up with these comments, right? Let's see what y'all got. I think it's the state of mind control is most people's weakness. 100% it really is. All right, see, I'm on about 50 to 55% accurate. Yeah, Devin, that's dope, man. That's fire. I think I'm around maybe 60% accurate myself, 50 to 60% accurate myself. Shout out to the people who suck like me, have a 30%, right? And then we have people like Skaggs, who's a 30% accurate trader, but, is probably one of the best traders I know, right? Stuff like that. It's kind of crazy. Let's see. Says my account, my metric. Yeah, let's get it. I seem to fluctuate like the market. Yeah, I mean, it happens, right? We all go through those periods of times, guys, right? There's going to be times where, we are winning at 80% accuracy, right? There's going to be periods and times where that happens, right? But then there's also going to be periods and times where we're not winning nothing, right? Where it seems like nothing is working out. There's swings in the market, right? Just like there's swings in our trading. That's why when we are looking at this number, what our win rate or our risk to reward is and our win rate and all this stuff, you have to look at the bigger picture. I'm not impressed, by you having a high accuracy for a week or two. That's not impressive, all right? Having a high accuracy for an entire year or even 6 months, that's impressive, right? If you're hitting at 80%, 90% for an entire 6 months to a year. See, now that's impressive, right? That's next level, right? And you're better than me, all right? But it's just really start thinking about it from a long-term perspective at the end of the day. All right, that's where I'm getting at with this whole little rant that I have here, right? Let's say I went 92% last month. That's crazy, right? So big shout out to you, Big Ed, right? That's amazing, right? 92% last month. Now, if you don't mind me asking, though, Big Ed, right, and you don't have to answer, right, but what did you do the previous month before that? Like, what was your percentage rate after that? And, if you don't mind answering what your current percentage is this month, right? If you don't mind, right? You don't have to, but I think it'll just bring a lot of context as well to what I'm saying, right? Because if you're still hitting at 90%, then you're an absolute savage, right? You're part of that, that maybe that 1% that's actually hitting at such a high accuracy. In fact, if and this goes for anybody, right? If you can literally win a 90% clip for 6 to 12 months, just say even just 6 months, right? If you could win for 6 months straight at a 90% win rate, then you could literally go and find, I could find investors for you, right? I could find investors for you that will throw $10 million at you right away, right? Like I can find investors for you that are absolutely going to throw money at you, no ifs, ands, or buts about it, right? Because this is the thing that we have to understand, guys, right? Yes, again, like I said, there's going to be times where you have a nice win rate, right? Where you're winning, right, nonstop, and it's going great. You're going through those winning streaks. But there's also going to be times where it's a losing streak as well, right? Like I go through losing streaks myself, right? The best traders, guys, go through losing streaks, right? Where nothing is working for a week, 2 weeks, right? It happens. It happens, right? It happens. It's absolutely normal. Don't let nobody try to lie to you. It's normal to go through winning streaks, but it's also very normal to go through losing streaks. That's why it's also important to look at things from the bigger perspective, right? Because I can go through a losing streak right now, right? I can go through a losing streak right now and say this losing streak lasted for the entire month, right? Say the entire month I had a crazy losing streak that I lost everything, right, as a collective. Most people are going to be like, damn, I lost this entire month, but what about the whole year, right? Because I could have one losing month but still be extremely profitable for the entire year. I hope this is making sense, guys, right? It's very important to understand this concept, right? So it's things like that, guys, that we have to understand, right? Don't get so caught up on the metrics. Don't get so caught up on your win rate. No, just focus on finding great setups that match your rules, right? That are high probability. Make sure you're managing risk. And then make sure you give yourself great risk rewards. So now back to what I was talking about here with EU. Guess what we have here for EU? Look at this risk reward. That is a 13-to-1 risk to reward. 13-to-1, which means, all right, if we are risking 1%, I don't know how to spell risk. Give me 1 second. Right, if we are risking 1%, just off 1% risk, right, we are gaining 13%. All right, we have 13% gains. Right, our gains are 13 times our risk. Insane. Right, insane. Right, that's why risk to reward is so powerful. Right, that's why risk to reward is the name of the game. Because if I'm finding setups like this, guys, that are giving me 13-to-1 risk to reward, I could really be 20% accurate and still be profitable. You can be 30% accurate and still be profitable. Right? In fact, I mean, let me just show you guys real quick, right? What is it? Forex profitability chart. Let's just see if it comes up for this, right? Because there's a graphic, guys, that actually breaks this stuff down, right? Let's see if I can find it. Here we go. This is the closest one to it, right? It's going to be very small, by the way, but you guys should be able to see. I have a cleaner one, but I'm not going to go through all my files to try to find it right now. Right, so let's go ahead and see this, guys, right here. So look at this, right? Risk to reward versus your win rate, okay? At a 5-to-1 risk to reward, simply a 5-to-1, right? Which means you're risking 5. Your target is 5 times your risk. You could be 20% accurate and still be profitable. Let me take off my glasses for that because I don't think you guys heard me. I have no idea what my glasses got to do with you guys hearing me, but you can be 20% accurate, which means you're only winning 2 out of 10 trades and still be profitable as long as you find trades that are giving you consistent 5-to-1 risk rewards. Let me put my glasses back on now because I think you guys heard me. Right? Is this making sense? Drop a 3 in the chat, guys. This is making sense, right? That's why risk to reward is so powerful, right? So if I'm hitting 13 to 1s, and if this actually plays out, then I don't care about any loss that I just took because it got completely absorbed with this one trade. I mean, guys, you guys can literally pass any funding challenge, right? For all my funded traders in the building, right? You guys can pass any funding challenge off of this one trade while risking 1%. One trade, phase 1 done. One trade. But it's also because, again, we understand the power of risk to reward. Right? We understand the power of it. We understand exactly how to take advantage of it as well. All right, so this is where I'm looking at, right? And big shout out to you, shout out to Devin, shout out to BTC Mommy, Tony, I see you, Martin, Bert, shout out to that guy, Bert, I see you, Danny, Queen Isabel, right? Shout out to y'all as well, Linda, shout out to you guys for, participating in the chat, right? I say this all the time, right? But, I truly believe, guys, that there's a correlation between the number of profitable traders and the ones that are commenting in the chats, right? More times than not, I realize that the ones that are actively commenting in the chats are also usually the ones that are doing far better than most. Right? So big shout out to y'all, that are active in the chats as well, right? Because I usually could tell, who's actually, understanding it and taking it serious by simply them commenting in the building, right? So I appreciate y'all, man, for doing that. Let's see, a lower win rate on longer trades with higher risk to reward ratio can be more profitable than a higher win rate on scalping with lower. Yeah, 100%, George. That's actually a very, very great point that you made there for sure. All right, because that is so true. What was the longest losing streak you've ever had? I mean, we're not even going to talk about my first 2 years, right? Because if we're talking about from when I started, right, I went 2-3 years, guys, with no results, right? And I say this openly and I say it proud because it is what it is, right? It's not like I could take it back. But I went 2-3 years, right, of just straight losing and blown accounts. I probably blown more accounts than every single person on this call, right? But if we're not counting that, if we're saying from when I became profitable, which again, for those of you guys that are new to any of my streams, I've been training for over 8 years now, right? So I got a little bit of a little bit of skin in this game, right? Over 8 years of me trading. My first 3 years, I made no money at all. Right, year 3, 4, I ended up finding some mentors. I got some help. I started to see some results. And really into year 4, going into year 5 is when I really had a crazy, stupid trading year, right? It was like a phenomenal trading year, that really got everything really, really rolling, right? But if we're going to talk about since I've been profitable, which I've been profitable now for about 4 years or so, I would say I still get times where I go 2 weeks, 3 weeks, guys, and it's just not hitting, right? Just not doing what it's like. The trades are just not playing out. If I'm talking this year, I think my longest losing streak this year was probably for around 2 weeks or so, right? Where I'll have some wins and losses there, but overall, 2 back-to-back losing weeks in a row, right? By the end of the week, I was negative. My P&L was negative. I had negative return. Right, it was around for around 2 weeks this year. Like this year, I've had that. Okay? But I've also had periods of time where it was way more as well. All right? So, yeah, it happens, though. It is what it is. This is the thing, guys, right? I don't judge a trader if they're going through a losing streak. It is what it is. Are you able to rebound from that losing streak? That's the biggest difference maker. Right? Most people go through a losing streak and they end up giving up because of that losing streak. All right, but then there's also some savages like you guys that go through losing streak and say, you know what, it is what it is. I'm just going to keep going. I'm going to figure this thing out. And then eventually you're going to find your way. All right, but yeah, it is what it is. It's a part of the game. Right? It is what it is, right? Let's see. Last month I went 87%. The month before, 91%. Currently this month I'm at 83%. Yeah, Big Eddie, that's very impressive, right? Again, listen, I don't doubt nobody's ability, all right? But to be at 90%, even 80% accuracy, that is extremely, extremely hard to do. So if you really are doing that, my brother, then big shout out to you. And in fact, Big Ed, I would love to actually get you on a call one of these days, right? Maybe sometime next week, Shit, we could even do that this week, Big Ed. Right? Let's actually get you on the stream if you don't mind and show us some sauce, right? You know, I would love to learn from somebody that's clicking at a 90% accuracy, you know, because you got some value to give to the not just the community, but my damn self, right? And I'll take that shit all day long, right? I've never been a hater. I'm always a student no matter what. You know, so if you don't mind coming on stream, I mean, family, how many of you guys would love for Big Ed to come on stream with us, right? With me one of these days this week, right? And see how he was able to actually get that 80-90%. I think that would be fire, right? You know, drop a 7 in the chat. Drop a 7 in the chat, guys, if you guys would like Big Ed to come on stream one of these days. You know, it literally takes, you know, that's nothing, right? That's easy as hell to do. You know, we could have Big Ed Asian session stream with me, right? And just go ahead and just provide some value to the family, right? You know, let me know in the chat. You know, and if Big Ed, if you're up for it, my brother, let me know. You know, we can set that shit up for sure. Let's see what else we got here. Finally, I'm on that My Forex Fund channel. Let's get it. I love it. Let's see. Please let us know long-term analysis on gold. Yeah, for sure. Let's go take a look at gold, right? So again, this is my play here, guys, that I'm looking at for EU. Like I said, if I do take it, I'm risking 0.5%. If I do take it, I'm risking 0.5%. Okay. Let's go take a look at gold now, right? Especially for Asad, you know, because Asad been asking a lot. So we got you, Asad. Let me go ahead and break this down for you real quick, right? And again, this is all my opinion, you know, as to what I think the market could potentially do. You know, but let's go ahead and really get into this for sure. All right, let's see. Let me actually just finish these comments and then we'll go ahead and get into this. No, I'm the king of blown accounts. Listen, man, I'll give you a run for your money, Tuck. I'm not even gonna lie. All right, I'll give you a run for your money. You know, it is what it is, right? It's a part of the process. You know, one thing that I always say as well, family, right? I say this all the time because it's so important, right? And this is not me encouraging people to go blow their accounts neither. I'm not saying that. But I truly believe you're not a real trader until you've actually experienced blown accounts, right? It's not just the blown account itself, right? But if you go from having some type of consistency to then blowing your account, right? And then if you're able to rebound after that and get back to that consistent way that you were, that is very impressive to me, right? That's a beast, right? You're not a professional if you haven't blown an account just yet because you haven't dealt with those emotions that come with it, right? You just have it, right? You know, so again, don't, and this for anybody that might have just blown their account. Don't be so hard on yourself, right? Don't be so upset if you might have blown that account, if you just lost your account, right? It is what it is. Just grow from that. Learn exactly what went right, what went wrong, right? And then change it. And then just take all that data that you got and just, you know, just act on it. All right, but yeah, let's see what else we got here. Powerful stuff. Rwanda in the building. Shout out to you guys out there in Rwanda. What's up? What's up? Abe the Great. Shout out to that boy Cody. I see you. What's up? What's up? Let's see what else we got here. Yeah, I see you guys got a lot of 7s in the chat. Wins equals losses equals wins. Yeah, that's fine. Yeah, look at all the 7s. Let's go, Ed. I been hit you up. Okay, Ed. Yeah, no, we're gonna have to get Ed on the stream too. And this goes for any of y'all too, family, right? One thing about me, I love putting people in position. Right? I love giving people an opportunity, you know, not just to educate me. Shit. I'm always down to learn something, right? But also educate the community, right? Like I love this shit, right? So yeah, yo, we're gonna have to make that. We're gonna make that happen. Let me see. Just make sure you'll send me a message again today, Big Ed. Right, send me a message today, and yeah, we'll get you on stream sometime this week for sure, for sure. Let's see. How are you able to handle your psychology and become disciplined? That's a good question, right? So I mean, it's one of those things, guys, where you got to just say enough is enough, right? You got to just say enough is enough, all right? Enough is enough, right? You know, everybody has to go through that breaking point where they're like, you know what? I know that I'm not winning because of me, right? It's not nobody else's fault. It's not my mentors. It's not this. It's not that. It's not the course that I bought. No, it's because of me and my discipline or my lack of discipline, right? So I had that breaking point, guys, where I was just like, you know what? Enough is enough, right? Like I know exactly what to do, but the reason why I'm not profitable is because of me. Right? Like self-accountability is so crucial in this space, right? How many times are you checking yourself? All right? I checked myself all the time. Even to this day, guys, again, 8 years in and I still check myself whenever I still do dumb things, right? You know, I'm still human. You know, there's still times where I want to go ahead and over leverage. There's still times where I want to go ahead and jump into a trade and get caught up with FOMO. It is what it is. We're all humans, right? But you got to be able to check yourself, right? You got to be able to check yourself immediately. so that you don't do it again, right? So I had that breaking point literally, again, 4 years ago, right? Where I was like, you know what? Enough is enough. I can't continue to risking, I can't continue to blow this money. I can't continue blowing this account. I can't continue to taking diaper money, rent money and putting it into these trading accounts and not getting no results. And I finally had my breaking through. I was like, you know what? Enough is enough. And then I finally became disciplined, right? But that's, again, something that you really have to internalize yourself, right? Are you tired of finally blowing an account? Right? Because if you're tired of finally blowing your account, then you'll actually be disciplined and you'll finally follow some proper risk management. But if you just saying that you're tired of blowing an account, but you really don't internalize it and you don't mean it, you're going to go back to those bad habits immediately. Right? Because that's it happens all the time, guys. Again, I know because I'm speaking from experience, right? Let me show you guys exactly how this went, right? And I'm gonna get into gold. I know you guys want me to mark shit up, and I'm gonna get into it, guys. But like I said, I had a lot of ranting to do you guys today, right? So I hope you guys appreciate these rants, right? And big shout out to all of our newest subscribers as well. I appreciate y'all. I love you guys for subscribing. Hopefully you guys subscribing because you guys are getting some value, right? But let me continue my rants real quick, and then I'll get back to the to the markups, right? But for me, one of my biggest struggles, guys, right, when I was really coming up, was greed. I think greed was my biggest issue, right? And discipline, right? Greed and discipline, I think, goes hand in hand, right? You're greedy because you're not disciplined, and you're not disciplined because you're greedy, right? So I think it goes hand in hand, right? But I think greed was my biggest issue. Marking up charts and identifying where the market was going to go, I didn't have no issues with that. I, for the most part, had a good idea as to direction of the market. The biggest thing that I had issues with, guys, was greed and not over leveraging, right? Over leveraging was literally the biggest reason why I was not seeing no results, because I was constantly over leveraging, right? And it was so bad, guys. Like, I don't know if you guys can relate to me, right? And I'm being very transparent with you guys because I want you guys to understand that it happens, right? But it would be like this. Like, this was literally my routine, right? At the job that I used to work at, right? I used to work at a warehousing job, so I used to get paid every Thursday. On Thursday, I would get paid. On Friday, I'll fund my account with maybe $50 to $100, right? And then come Monday or Tuesday, right, the next week, that account is blown, right? Completely gone, right? And it's because, again, my addictiveness to over leveraging. I was addicted to over leveraging because I was trying to rush the process, right? I wanted to become a millionaire overnight. I wanted to turn $100 into $100,000 in just a couple hours, right? And that constantly got me. So that was my biggest issue, was over leveraging. For some reason, I couldn't stop doing it. Like, it was one of those annoying things that you shouldn't do, but you just couldn't stop doing it. You had no self-control. How many of you guys in the chat right now, let's be real, right? I'm being transparent. I want you guys to be transparent with me. How many of you guys in the chat right now is also dealing with that? That your issue is not understanding where the market is going to go, but your issue is that you constantly over-leverage to the point that you're maxing out your account, and then you get stopped out before the major move even happens. Or am I the only one? Right? I know I can't be the only one. Right? But who else has an over-leveraging problem? Right? We got to unpack that, right? You got to be able to unpack what your main issues are. And then figure out the solutions, figure out ways to change that, right? Because for me, that was my biggest issue, was over-leveraging. Like, I say this with utmost confidence because I know that was the biggest issue I had. I couldn't stop myself from over leveraging. I couldn't stop myself from throwing, a standard lot on a $200 account. For some reason, I thought I was Mr. No when the market's going to reverse, and it never played out in my favor. Right? So I knew what my biggest issue was in my first couple years. So once I was able to get that down packed, everything started to change. Once I stopped finally over leveraging, the results started to show up. Right? And even if over leveraging is not your main issue, right? Because it could be more so just a mindset thing, like fear, right? Doubting yourself, things like that. Go ahead and write in the chat right now. What is the one thing that you truly believe is truly stopping you from seeing the consistent results that you're after right now? Answer that in the chat, family, if you don't mind. Let me see. Let's see, it was dope as hell when I was on there. Don't take it for granted for sure. Now, Devin, you definitely going to be back, bro. That's what I'm saying, Devin. You're a little different than most people in the chat, bro, because we already have a relationship outside of this stream. Right? Like, we actually, linked We met up in person. We traded. Like, you've been on the team for a while, bro. So, you know, you're always more than welcome to come back on for sure. Let's see what else we got here. Let me see. Let me see. I'm trying to catch up with y'all. Let me see. Because y'all going crazy right now. Let me catch up with the chats. Let's see. I blew around 20. Oh, and by the way, family, right? I do appreciate that boy Skax for I got to change a few things as well, guys. All right, give me a second, right? I do got to change a few things because unfortunately my Instagram got hacked, or not hacked, but unfortunately some haters ended up getting my Instagram deleted. So now I got a new Instagram, right? So if you guys are ever so kind enough to go ahead and make sure to follow this one, that's directly under my face right here. Right, I appreciate y'all for doing that, man. Definitely go ahead and show me some love. Go ahead and follow me on Instagram, and I'll follow you guys right back. All right, I'll follow anybody that follows me tonight. I'll follow you guys right back as soon as I'm done with this stream. Appreciate y'all. Right, but let's see what else we got here. Right, I blew around 20 funded accounts. Yep, it happens. Let's see. Thanks, Abel. Appreciate it. It's the mentality behind it. I'm telling you. Let's see. Well, call me a real trader. It only depends if you were able to bounce back from that blown account, right? If you blow your account, you're able to bounce back and become somewhat profitable again, and that's, yeah, you a real trader. It's fire. Let's see. Do you set limits if you expect price to touch a certain point during a session where you're asleep? Yeah, 100% I do, right? I love pending orders, especially if it's something I think is going to trigger during London session. 100% I will for sure. Let's see. I have blown 3 accounts, but I'm on a consistent roll for the past 4 months. Let's go, Raymond. That's what I love to see. Let's get it. When doing a funded account, how do you calculate the risk? Is it based off the 5% daily drawdown or the overall account size? Never use the overall account size for funded accounts. Ever. All right? That's how they get you. Right? You always want to use either the 5% daily drawdown or your overall that they give you, which, again, is either going to be 10% or 12%, right? So I personally, that's totally up to you. I usually just use the overall, drawdown, right, which is usually around 10 to 12%. All right, but never use the overall account size, guys, for funded accounts because you're never going to win that way. They be setting you up like that. Let's see. Looking for a trading strategy. Yep, that would definitely do it. The only difference from when I started to now is I lose less. Yeah, there we go, Eric. That's a fact. That's exactly how I do too, right? Let's see. Journal and jot your thoughts down. It helps a lot of people, 100%. How do I mentee them? Do y'all want to become a full-time trader within 10 years? You could definitely do that. You honestly could do it less than 10 years, to be honest with you, right? But if you want, just send me a message on Instagram, and I can send you some information on how to, get plugged in with myself, and not even just myself, right? But it's the team, right? I have a whole team with me that is you'll also have access to. Let's see. I come here for the talks, not the charts here, right? Greed fucks me up doing HFX. Yeah, that's why I don't trade options like that no more. All of us are greedy. The pro traders learn how to control it over time. You can tell new traders not to do the new things. You did wrong and they will still 100%, Eric. Yeah, exactly what it is. All right, let's see. Ain't never lie. Yes, sir. That was me for sure. Facts. That was me 2020. Guilty. That's me. I won't lie. Yep. Often. I be over trading too much. I don't over leverage like I used to. That's growth. Yep. Me finally find myself in trading. Yeah. Was for me for sure. Me too. Listen, I'm pretty sure every single one of us guys had gone through a lot of stuff like that, right? Big facts just happened the other day. Yeah. Not me anymore. Lost a lot. Right? Yeah, right? You get to a point where you start losing so much, you got to say enough is enough, right? Let's see. Yes, being a millionaire in days is a big problem for most traders. Yeah, 100%. Right? It happens, right? It be like that, right? I used to trade without stop losses. I know a lot of people that do that as well, and I don't know how. Shit is ridiculous. Yeah, right? Self-control. What drawdown? Yep. People like to learn the hard way. That's what traders showed me. Yeah. And I think, honestly, trading is one of those things that you have to learn the hard way, right? Believe it or not, right? I think that this is one of those skills where, like, yeah, we can tell you not to do certain things, but you have to experience it yourself to get that real growth, right? I truly believe that trading is one of those things that you have to go through shit to actually experience shit so that you know not to do shit more else, right? So, yeah, it literally happens for sure. Over leveraging is like cracking the 80s. Yeah, I'm telling you. Man, you are talking my mind. Yeah. After depositing 4K and went down to 1,800, I stopped. Yeah. Right now, Bert, if you don't mind me asking, Bert, right, how long did it take you to go from that 4K to 1800? Right, was it over a long period of time or was it quick? Right, because again, for me, my issue wasn't just the over leveraging, but it was that I was over leveraging the entire account. Right, like I wasn't risking 5%, 10%. I was risking 50%, 60%, 70%. Right, at times I was risking the whole account on one trade because I was so fed up with the trade itself. Right, and it all happened right away. Right, like I was literally funded. Like when I gave you guys that scenario, guys, of me funding my account on Thursday for me to only blow my account on Monday, like that's real. Like I did that for an entire year. I will fund my account, it will be blown by Monday. Like what? Like how? Right, if I was really practicing risk management, there's no way in hell I should be blowing an account in 3 days, but it happens. Right, it's one of those things that we go through that we have to understand and we have to get through. All right, but yeah, you guys, I love you guys being honest and transparent with me too, man. I truly do love y'all, man. It helps a lot for sure. All right, let's see. Let's see what else we got here. Let me catch up with the chat because you guys are going crazy right now. Lack of traded knowledge. Yep. Let's see. Making a lot of money and giving back to the market. Yep. Fear of losing. Trying to catch the top of reversals. Yeah, that usually is too, Martin. Right. That's usually the other thing. Always trying to catch tops and bottoms could definitely hurt. Let's see. Just got here. What's up? What's going on, Trader Rico? Appreciate you tuning in, my brother. Let's see. 17 euros down 500 so far over 3 months. That's not bad. Shout out to you, man, for 17. Right. That's amazing, man. I love when I see, the younger community in here. Right. So shout out to you, Bet You Woman. That's amazing.
Hi, man. You have any tips for FOMO and OVR trading?
Tips for FOMO and over trading, right? Yeah, of course. I mean, first of all, FOMO is one of those things, guys, that, again, we all have to experience. We all have to get through. But one thing that we have to understand, guys, very simply, right, is that there's always another opportunity. Right, we are trading, guys, in a financial market that is moving trillions of dollars in a day, right? So for the FOMO thing, I get it because I also had to go through that as well, right? The fear of missing out. But once I realized that there's literally going to be another trade and then more trades after that and then more trades after that come, it really alleviated a lot of the stress, right? So one thing about FOMO, first of all, just understand, man, there's always going to be ample more opportunities. Right, so if you're already having FOMO, for one, this is the first question you got to ask yourself: why are you even having FOMO? Right, are you having FOMO because the trade itself just left you? All right, because if that's the case, then it is what it is. You gotta let it go. Right, do not chase the trades. The market, right? Don't chase the markets. The markets do not want to get caught. It is what it is. You gotta let that go. Or are you experiencing FOMO because of other things? Right, but first things first, guys. There's always going to be another trade. Right, you always have another trade, right? So that's that. And it comes to over leveraging, you have to understand, right, that as long as you are constantly over leveraging, you're literally doing yourself a disservice. Right, over leveraging is not a good thing in this space. Right, you never want to overexpose your account to risk. Right, overexposing your account to risk, it's never been a recipe for success at all. Right, especially long term. Right, so you have to understand that over leveraging and overexposing yourself to risk is it's one of those cardinal sins you never want to do. Right, that's why they say you want to, only risk capital, guys, that you're very comfortable with losing, just in case you do end up losing it. Right, but even so, you want to risk an amount that you're comfortable with risking. A reason why most people's emotions go through the roof when they're trading is because they're always over leveraging too much. And even if they're not over leveraging per se, they're risking more than what they're comfortable losing. And if you're risking more than what you're actually comfortable losing, then again, it's one of those things where you're gonna get caught into that whole mindset trap, right? Where now you're gonna have to not just battle the markets, but now you have to battle your own self. And whenever you get to that point where you have to battle yourself, you're always gonna lose. You're already lost technically, guys. I hope you knew this, right? You can lose a trade well before you even place the trade. You can lose a trade well before you even place that trade because it's all a mindset thing, right? So if you're experiencing FOMO or if you're experiencing fear, or if you're experiencing doubt, if you're experiencing any emotion, you already lost. The market already got you, right? The market got you exactly where it wants you, right? It wants you overcomplicating things. It wants you overthinking things, right? So let me say that one more time, right? You can lose out on a trade well before you even take that trade. And you don't even know that you lost out on the trade because you're not aware of it. So you're still going to go ahead and place that trade, and then you're going to lose again, right? So it's possible to take 2 losses, guys, off of one setup, right? You could take a loss mentally because you're in your emotions, and you can also take a loss in the charts as well. That's a bar. All right, so I'm just throwing it out there, all right? All right, let's see what else we got here, right? Man, you know, that was CT, that guy. I don't know who got my Instagram deleted, right? I know somebody got my Instagram deleted because I'm not the one to just, create mad crazy stuff on Instagram. In fact, my Instagram was just strictly all me. It was all like my family stuff, right? So there was no reason for my Instagram to get deleted, but it is what it is. I'm just going to build up this new one until I get this old one back, and yeah, be like that. Let's see. I'm good at technicals, but want to get that one loss. I always try to get it back and end up losing half my account. Henry. Yeah, that happens, Henry. All right, it's one of those things, right? That revenge trading is a real thing for sure. Let's see. I blew accounts when I was with IML for over trading. Big shout out to IML, by the way, right? If you guys don't know, I was actually an educator for IML for 4 years, right? So I got nothing but love and respect for that platform. I know, it's a little different here on YouTube. Everybody has their thoughts and opinions on it. But I was the one actually teaching this shit on there, right? So if you're getting value right now, right, this is the exact same stuff I was teaching over there, right? So I got nothing but love and respect for the platform. I got nothing but love and respect for all the traders that were actually there, too. All the real traders that were there, right? So, yeah. Let's see what else we got here. I don't follow my plans like a discipline. Yep. Let's see. Right now, I got no strategy. I'm 20 right now. Yeah, just get that strategy, man. It's going to work. All right, let's see what else we got here. I know most traders pick a specific time session to trade, but what are your thoughts on just waiting on price to come to their level and trade regardless of what time session it is? That's a good question, Andy, right? Because I personally am a big fan of trading during high volatile sessions, right? So London session, New York session are usually, even though I'm not awake during London session, there's times where I would set pending orders to actually trigger during London session, right? Because I know that that's the most volatile times of the day. But I'll be lying to you if I told you that I don't take trades during Asian or even during, I don't take trades during Sydney session, right? That's definitely out of the equation. But there are times where I do take some setups during Asian, right? Especially if it just looks really, really good, I'll take it, right? I'll take the trade as long as it looks good, right? So, but yeah, it really just does come down to preference more than anything. I've been on a social media fast. Is there any other way to contact you, right? I mean, social media is by far the best. If you want, you can probably even just, social media is by far the best way, right? But what you can do, if you're not on social media, I would recommend you to come to this platform right here because this is our social media platform that we created. Shout out to, again, me and the Profit Society team. We do have our own social media platform for traders, by traders, built by traders, for traders, all that good stuff, right? I'm not even going to get into a nice little fancy spiel. But if you don't want to use Facebook, Instagram, none of those social media platforms, then by all means, come here. Come to theprofitsociety.co. Go ahead and create an account. And, message me right on here. All right, that's a great way for you to do it. Let's see. What's the best funded account to get as of right now? I still like my Forex fund as the best, right? In my opinion, my Forex funds is still my go-to just because it's the cheapest and it offers the best parameters. All right, shout out to you, Arturo. Let's see. Can one succeed as a trader with a 2-to-1 risk reward with a 60%, 100%, right? With a 2-to-1 risk reward, all you need to do is be around 50% accuracy and you could win and you could be profitable. All right, 100%. All right, Sale. Which one is yours, Sale? All right, because I don't see no Sale. I don't see no name Sale on here, right? But if you tell me what name you're at, let me know. And, yeah, I could definitely take a look at it for sure. All right, let me know. Are you this Omar? Is this you right here? All right, yeah, let me know which one you are, and I got you. All right, I'll take a look at it. All right, let's see. Should a beginner trade gold? Yeah, I mean, as long as you understand proper risk, you could trade anything. Right, as long as you understand how to manage your risk, yeah, do your thing. All right, let's see. This is like dinner time for traders, right? I know a lot of people who make profit but can't keep 100%. I do too. Let's see. It will, sir. Please give detailed lecture on how to control your emotions for over leverage. How to control this tomorrow Asian stream. Yeah, I'm gonna have to create like a whole. I'm gonna create a whole video. All right, just like on mindset for you guys for sure to get you guys right. Let's see what else we got here. Lose a trade before you place it. Yeah, that happens all the time. Let's see. Can you check my Euro AUD? I dropped into Telly. Yeah, I got you. Let me see what you got here. Let me see what you got here, right? Let me go ahead and okay. Let me go ahead and bring this up over here, right? So shout out to that guy, Jude. Been putting in hella work, by the way, right? But it's an interest. I see you've been going crazy, Jude. I don't know if you always use the volume profile now or if you just do it just for me. But either way, man, you've been absolutely going crazy with the volume profile tool, right? But this Euro AUD is actually pretty interesting. Let's see. You want to look for the buy at that 1.5485 level. Very interesting. Yeah, I'm gonna have to take a look at it too. This is a 5-minute set. I mean, it looks interesting. It looks good. I think that there could be a nice reaction off of that point POC, that point of control for sure. But I'll take a look at it and I'll do my own analysis on it over here as well. And yeah, we'll see how that plays out. But overall, it looks good based on what you had there for sure. Let's see what else we got here. We need some merch that says that's a bar. I remember the Zoom videos. Yeah. Let's see. Is it possible to over leverage and manage risk at the same time? I see traders using 3 lots on a small account with 5 to 7. I mean, I don't think that even makes sense, right? If you're over leveraging, that means you're not managing risk at all, right? Like that's just point blank period, right? If you're over leveraging, you're not managing risk completely. Like, you're just not, right? So is it possible? I don't think so. But one thing that you have to understand, I think this is where you're confusing Fabulous Forex, is the smaller your lot size, the larger, or the smaller your stop loss, the larger your lot size can actually be, right? So for an example, let me see if Nash Markets allows me to bring up the position size calculator, right? For example, let's just say hypothetically speaking, we have $500 account, right? And this is just, again, just, hypothetically speaking, right? Let's say we're risking 2% just because, let's just go with, let's just go with Euro USD, right? Let's keep it simple, right? So, for example, let's say we enter here. Our stop loss for this example is going to be around 40 pips stop loss. And if we take the trade off for this parameters, right, $500 account risking 2%, with this trade being a 40 pip stop loss, we calculate it. It looks like we can't take that trade, right? So that trade we can't even take because it's over leveraging, right? And this is a very good point, guys, right? 40 pip stop loss on a $500 account. And if we only want to risk 2%, we can't even take that trade, right? We can't even take that trade, right? Because it's too big. It's over leveraging. Okay, so let's go ahead and lower this to 20 pip stop loss. Let's see, right? Let's see what comes up, right? So with a 20 pip stop loss, you can actually throw a 0.05 lot size, right? A 0.05. But now, say we're a beast and we have, let's say we have that, 5 pip stop loss, right? With a 5 pip stop loss, see, now we could throw a 0.2, right? So 20 pip stop loss, we're only doing 5 cents a pip or 50 cents a pip. Whereas to a 5 pip stop loss, now we're doing $2 a pip, right? So, yeah, depending on how big your stop loss is, that's what's going to dictate your lot size, okay? And that's the biggest thing that most people don't understand. Most people decide, right, their lot size based on, a bunch of random stuff, right? No, your lot size needs to be placed on how big your stop loss is. If you have a big stop loss, then your lot size is going to be smaller, right? But if you have a smaller stop loss, then your lot size is going to be bigger because of obviously, the risk parameters that you set for itself, right? But that's that. So no, it's not possible. I consider going back to IML because of you. When I found out you weren't there anymore, I said, nah, I'm not going back. And that's love, Maria. I appreciate you. All right, I think gold will spike to 1740 during FOMC and keep pushing up and break latest high. Any thoughts? Yeah, I'm going to get into this for sure. All right, I'm going to get into this for sure. Let's see. Let's see. All right, so let's go ahead and break down this gold now, guys, right? Because it's a very interesting point here with gold. And it's very interesting to see where we're at, right? So with gold, I'm very interested to see, guys, how we actually are going to react for gold, right, up around these levels right here, all right? Because I think we actually reached a very interesting, guys, kill zone that could realistically hold, right? Just like I mentioned with EURUSD. You know, I think there is a very good chance, guys, where this could be the high of this current cycle that we're in right now. Like, I wouldn't be surprised about that, right? And again, I'm just comparing a few different things, right? The first thing I'm comparing, guys, is I'm seeing what happened here, first of all, right? We've seen the market come down here. We've seen it actually create this support, right? This support right here, guys, has now been tested a couple times, but it never was actually broken, right? So now we have a ton of liquidity down to the downside, and I think eventually we will come and run this support, right? That's just me, my opinion, right? I think we eventually do come and run this support, right? But does that mean we're going to start up here? I think it's very possible, right? Especially if we look at what the market is doing in terms of price action. You know, we're coming back up, guys, into this area of supply, or AKA this kill zone, right? And we're coming up into this kill zone, guys, or this area of supply, right, while we're creating all of this price action that shows that momentum is starting to slow down. Now, is it possible for this to go ahead and break out higher? Of course, right? I mean, depending on what happens tomorrow, yeah, right, it very would come out. It very would could happen. But my opinion and my guess, right, I think that there is actually a very good chance that we actually end up rolling around from these levels, right? And again, if I'm wrong, it is what it is, right? But I think there's a very good chance, guys, that we actually end up somewhat tapping out up here. Like, I don't see us going too much higher, in my opinion, right? I think that there's actually a very good opportunity for us to really start to look for some shorts up here in this 18, above this 1800 level, right? I think there's a very good opportunity for us to really start looking for some shorts. All right, so that's what I'm going to be doing, right? I really like where we're at. I think momentum is clearly slowing down with this little ascending triangle that we have here. If we go ahead and add our, our MACD in it, we can also notice, guys, that the highest buying volume was back here at the beginning of the month, which lines up with all of this buying volume that we've seen, right? But ever since then, yeah, we just created a new high, but we created a new high on very low volume, right? It's not at least as much volume that we've seen in the past. So we're seeing some type of a divergence here, guys, as well from price to the actual indicator, right? Where price is still creating higher highs and higher lows, but the momentum or the volume-based indicator is already shifting, right? So we're starting to see signs of this being potentially the high of this current cycle that we're in. And if we really take a look at gold, I mean, what has gold done all this year? Right? Gold has actually been very bearish all year round, right? In fact, I mean, you can literally compare, guys, the moment that they actually started raising interest rates, that's the moment that gold started to go lower, right? Raise the interest rates started going up in March. As soon as they started raising rates, gold has been on a free fall. And since they still are planning on raising rates, right? As of right now, they're planning on raising rates all the way up closer to that 5% level. Obviously, once the summary of economic projections comes out tomorrow, we'll be able to know exactly where the Fed is expecting interest rates to head to and to stop at, right? But I think there's a very good chance that we do start to see this thing, guys, go back into that overall bearish trend, right? Again, it's just my opinion. But I'm very, very, very confident, or not confident, but I'm very optimistic for this, right? I think there's a very good chance that we do end up going, right? So now let's go ahead and break this stuff down, all right? If that's the case, all right, Abel, we get that, but how can we get involved? Where can we take some trades from? I want to go ahead and get in this position with you. All right, bet, all right? So what I'm looking at for me, guys, if I'm looking to take any type of trade, right, for gold, I want to see, let me go ahead and use this, right? This level right here is going to be very interesting to me. Right? I think this level right here, guys, is going to be a level where we actually start to build up a lot of liquidity, right? I mean, we've been building up a ton of liquidity in this inside of this entire range, right? Both of this, I mean, we've been trapped inside of this range right here literally since after news, right? So now we have buy side liquidity above. We also have sell side liquidity down here. Now, again, I think that we will eventually sell off, in my opinion. But before we do that, I think we're going to end up running buy-side liquidity first, right? And then we're going to go ahead and shift to capture sell-side liquidity. And then from there, we could potentially go ahead and continue this thing lower, right? So that's what I think. That's my personal guess, opinion, as to what I think, guys, the market could do for gold here, right? So if I'm positioning myself to take advantage of this, I personally want to go ahead and get in, somewhere back up at these highs. If we're able to see price come back up to this 18-19 level, around that 18-19, oh yeah, I think there could be a very good opportunity here to go ahead and ride this thing down. All right, so that's just my opinion. That's my guess for gold. For anybody that was asking, I know gold is definitely a fan favorite for a lot of traders, just because of how volatile it is and how she moves. But yeah, that's how I would personally be playing gold, guys. Right, I would need to see it, come back up into these levels for sure. Right, up around this 18-19. For me to go ahead and start looking for some shorts again. Right, let me see. Let me go here, lower time frames. Let's see. Yeah, that's fair. Yeah, that's what I would like to see. I would like to see price come back up to this around this 18-19, stops above the high. It's going to be a little bit of a wider stop, guys, just because, again, it is gold. But I think there's a very good chance for the market to go ahead and reverse from this, 18-19, 18-20 level for gold. And very simple, go ahead and run this liquidity, all this liquidity right here, and then we'll go ahead and see a nice shift to go ahead and go send us lower. That will be my best bet, right? For sure. Let's see what else we got here. Most people choose not to understand risk management. I was one of those. Yeah, I was one of those too, 100% for a while too. That's the crazy thing. I don't know what's up. What's going on in MH14? I don't know if I realized that for a lot of us, the value of their product was because of your basic to advanced instructing. They lost a gem. I appreciate that, G. All right, shout out to that guy, George, man. He really been showing love for a while. Man, I appreciate you, brother. All right, so this doesn't look too bad, guys. This will be my play here for gold going into tonight. All right, that will be my play. This is similar to the pair before you, 100%, right? It's going to be similar to a lot of USD pairs, right? A lot of the pairs that end in USD, right? Like EURUSD, GBPJPY, AUDUSD, NZDUSD. They're all going to be very, very similar to what gold can potentially do, right? Because they're all correlated with the dollar. All right, so yes, that's my guess. All right, let's see. USD CAD longs looking good. Yeah, let me go ahead and take a look at AUDUSD because I know that is also one that was called out. And it's going to be very similar to what I just said here for gold. So I'm not going to go over the whole spiel, right? But very simple. If we can see gold come back up to maybe this level up here, I think that there's a very interesting opportunity or a chance for us to go ahead and go short on, right? I would love to see something like this, right? The market come up bounce back up into these levels around the 0.687, and then from there we go ahead and send us back lower. Now again, I do have to reiterate this. Keep in mind, things can be completely different depending on what happens tomorrow for FOMC. But based off what we're currently looking at and based off the technicals that I'm reading and analyzing, that is pretty much what I will be looking for sure. All right, let's go take a look at USD CAD for all my guys asking for USD CAD, guys and girls for asking USD CAD. Let's see where we at here for this one. Right, so USD CAD, very interesting, right? So very simple, very straightforward. I mean, I already see where I want to look for buys from here for USD CAD, right? I would love to see price come into this demand zone that we have here. Let's see, let me change this color to white. Save that. Yes. All right. So I really would like to see price come back down into this demand zone. All right. And then from there, go ahead and potentially give us more higher pricing. Right. Very, very simple here for USD CAD. Right. Again, reason why I like this demand zone. I mean, I spoke about this last week. Right. And I don't really speak about this too much, guys, because this is like one of my signature entry moves. Right. Which, again, is all broken down in depth inside of my entire course, which I can't wait for you guys to get access to once it's finally finished, right? You know, all you guys that are a part of the boot camp, I appreciate y'all. You guys know that you guys are all grandfathered into that, which is going to be crazy because you guys literally are getting in, like y'all getting access to this in-depth course for like, I mean, it's kind of crazy how cheap it is that you guys are getting it for, right? Pretty much. But yeah, you know, so looking at this flip of this candle, guys, is so powerful, right? Like, this candle right here just tells me such a strong story. It's not even funny, right? The fact that at one point this candle right here, this daily candle, guys, was actually engulfing or lower than these previous day candles right here, right? Like, it actually broke the low of the previous 2 days, but then ended up closing very bullish. That is just telling, right? That's telling me everything I need to know, right? So that's why for me, I really believe this demand zone is going to hold, and we're gonna see higher pricing for sure. And I think there's gonna be a great chance that for us to, you know, for us to go ahead and target these highs up here. You know, very easily we can go ahead and target, you know, all this buy side liquidity up there, right? So that's just looking at it from a daily perspective. Let's start working our way down now real quick, right? Now let's start looking at it and see what we got here. So looking at this from the actual 4-hour time frame, what have we seen? Really not much, right? Again, the obvious, we've seen this massive push up. We've seen this little double top created, which again, double top is creating liquidity, right? Big shout out to Javis for subscribing. I appreciate you, right? But we got, you know, liquidity being built with this double top up here. All right, so I think even though there is a chance for us to continue going lower, I think there's a very good chance, guys, that we do end up, you know, very much higher, right? So I'm a big fan of looking for some buys, you know, down here at these extremes for USD CAD, right? I think there's a very good chance for price to react down here 100%. Right now, again, every trade isn't 100%. But I'm just very confident in something like this, right? Like, I would all day long be looking for an opportunity like this to take advantage of. Something like this, right? Target back up to the highs. But realistically, you can even target, you know, even higher, right? Because especially since this equal high right here is probably going to be building up a lot of liquidity, we could probably target right above the highs, you know, back up into this, you know, last level of structure that we have all the way up here. All right? Very, very possible for this to happen. I don't like... Hold on, family. Hold on, family. I don't like how this looks. There we go. All right, so I think it's very possible for us to make our way back up here for sure. All right, so that's where I will be targeting. Back up into here. This is not a bad play. I'm telling y'all, it's not a bad one. Right? I do like how this looks. So that's how this, you know what I'm saying? I don't know about y'all, but this could be the play here. Now, again, it is a little bit of a wider stop, around a 40 to 50 pip stop, just because we're playing the range, we're playing the extremes. If you wanted to, you can always go lower time frame and even try to, you know, fine tune it if you really wanted to. But just to keep it very basic, you know, anywhere around this 1.344, that's where I would start to look for opportunities to go long, right? Which means I'm going to be waiting for the market to give us a nice reversal, right? A nice candlestick or a nice market structure reversal down here that telling us the market is getting ready. And then from there, we can go ahead and start to write it out, right? But I really like that UCAD, right? I think it looks really, really good. All right, so big shout out to you guys that actually told me. You know, big shout out to you, Jay. Big shout out to you, Bert, because it actually does look very interesting. I called out GJ Shorts on Profit Society. Nice drop. I'm pretty sure you did. All right, Eric, you be in here going crazy. Let's see. GJ Trade Idea shared earlier. Nice reaction. Let's see if sellers can hold. Okay. Man, and look at your follow-up. Yeah. Yeah. Yeah, Eric, let's go. Nah, that looks really good. That looks really, really good for sure. All right, but yeah, this looks good, guys. Right, I think this is a very good potential play here that we could take advantage of for USD CAD, in my opinion. In my opinion, of course. Let's see. I want to dip down a little bit for potential swing longs. Yep. Would you close your trade when you realize you're wrong, or would you let it hit your stop loss? I mean, if I realize that I'm wrong, like during the middle of a trade, then I will close it out. Right? But if I'm in the middle of a trade and I took it for logical reasons, I'm letting it play out and I'm letting it hit stop loss. If it hits stop loss, it is what it is. But if I take the trade and I realize that I was just wrong for whatever reason, like my analysis was either just wrong or I see things a little bit differently, whatever the case may be, right? Yeah, I'll definitely manage my trade. I mean, guys, you want to know something that's just as important as risk management? Trade management. All right, this is one thing that a lot of traders don't talk about, right? It's trade management. But trade management, guys, is just as important as everything else, right? As your risk management, everything, right? So managing your trade is a skill in itself. And yeah, you got to learn how to do that for sure. All right, but don't sleep on that trade management technique. That's so important. Let's see what else we got here now. Can you break down tomorrow's forecast? If it's expected 50, then that should be bullish indices because the Fed will pivot. I mean, if the Fed drops it to 50 basis points, which we know they're gonna drop it to 50 basis points, right? Like it'll be a shock if they don't come out at 50 basis point, right? I think that the market itself is really not gonna react off of that. Right, per se. Like, yeah, it's going to have some type of reaction, but I think the main deciding factor for the overall reaction in the market is not even going to do the interest rates, right? It's going to be more so from the summary of economic projections, right? Because right when the federal funds rate releases, they're also releasing, guys, their economic summary of projection or their summary of economic projections. And I believe, right, that the summary of economic projections is what's really going to cause the markets to shake, right? Yes, the interest rate decision is going to cause it, obviously, but I don't think that's going to be the driving factor. I truly believe it's going to be the overall economic summary of projections, right? What the Fed is planning on doing or what their expectations are. That's going to really drive the markets overall, right? That's why tomorrow, guys, we are going to be live with y'all, right? We will be live at 2 p.m. Eastern Standard Time. We'll actually be live probably around 1:30, right? Like around 30 minutes before. So that we can not just take a look at the federal funds rate and what it comes out as, but to see what the economic projections are, right? Like the summary of economic projections. We want to see what that is, right? That's going to be the main thing that's going to be driving the markets. Let's see. How are we doing? Sorry, what's going on, Michael Angel? Michael Angel, what's up? What's up? What up, bro? Do you believe in just trading one pair? That's a good question, right? Because I personally don't just trade one pair, but I also see the positives in just trading one pair, right? I don't think there's too much negatives to that, right? I'm not opposed to it, because if you're trading one pair, you're able to learn that pair's personality, right? You're able to learn that pair, like the back of your hand, right? Like when it moves, why it moves, exactly how it moves to certain news events, to certain releases, when it's more active, how many pips on average, that pair moves during specific sessions. Like all that stuff is powerful to have, right? So I don't think there's really any downfalls to that. But I'm more one of those traders where I don't really care too much about the pair, more so the setup, right? I don't trade the pair just because it's a pair. I trade the setup more than anything, right? So I could trade any pair, right? Realistically, any pair out there because I'm looking for a specific setup, as opposed to trading specific pairs, if that makes sense, right? But I also don't see no downside to focusing on maybe one pair. Let's see. Can we take a sell from 1.36 down to that buy entry on USD CAD? I mean, it is possible, right, for you to do that. But the question is, where do we want to go from, right? If I were to take a guess where we could potentially sell from, if we were to actually sell into that down, sell down into that level, it will probably be around this level around here, right? Around this 1.365, right? And again, I'm not personally taking this sell, right? I might end up taking the buy if it gets there, right? But the sell itself, I'm not going to be taking. But if I was taking, it'll have to be something like this, right? Up here at this 1.364. Up in this little level of structure, go ahead and capture this little buy side liquidity that's been building right here. Run that, come up into this level of supply. This is where I would take a sell if I was to take it, right? Right up here around this 1.365, 1.365, 1.365. That's where I would possibly consider taking it if I was. Do you ever use imbalance to predict reversal points, right? So I do use imbalances for sure. But I don't necessarily use it to identify reversal points. I do it just to identify where I expect the market to eventually get to, all right? Because I understand the power of inefficient or Yeah, the difference between inefficient and efficient price action. Okay. When price is able to buy and sell, like all of this is efficient price action, right? All of this buying and selling that's happening right away, efficient price action. This is inefficient price action, okay? AKA imbalance, right? So the market does not like leaving inefficient price action behind, which is why typically we will always come back and fill the inefficiency with efficient price action, right? So I don't necessarily trade it just to find a reversal, but I do keep it in mind to identify where the market will eventually want to get to, right? Because I do expect eventually all this inefficiency to eventually get filled. All right, let's see what happens to going live for news. Yeah, we will be live tomorrow. As for today, I was on a flight today, right? So I wasn't able to actually go live with everybody this morning. I know the team did go live, right? I know my guy Skaggs and Kyle went live with you guys this morning. I think they actually went live via Zoom, though. I don't think they went live on YouTube. But I know they did go live this morning, right? I personally didn't because I was on a flight. I was actually coming back home from Orlando, so I wasn't able to do anything today trading-wise. All right, let's see. Can you take a look at GBPJPY? Yeah, for sure. All right, so let's take a look at GU. All right, so GU is going to be an interesting one, guys. And one thing you guys got to be aware of, right? We do have, again, something major for tonight. All right, we have major data getting released tonight. All right, we have CPI data coming out at 2 a.m. Eastern Standard Time, like right before London session. All right, and this is going to be a big one. Right, again, CPI is that one event, guys, that everybody's paying attention to across the world. Right, every central bank is eyeing it. Every investor, trader, for the most part, should be paying attention to stuff like this. And yeah, so that's definitely coming out tonight. So that's just one thing to keep in mind if you guys are trading any pound pairs. But what I think we can do, or what I would like to see, guys, I think just like I said with EU, just like I said with gold, I would love to see this thing just continue to go ahead and go bearish now at this point. Right? I think there's a very good chance that we do see this thing eventually roll over and we get back into this overall trend that we have been in, this entire year. Yeah, literally, this thing has been bearish for a while, all right, since 2014. Golly. Well, even further, right? Damn, the pound has been getting destroyed for decades. The pound has been getting wrecked for decades. Literally, look at this. All the way since the 70s, we have been going bearish. That's crazy. Right, so yeah, I do think, though, we will eventually end up going back bearish. Right, I think there's a very good chance for us to actually go ahead and do that. Especially up at this supply zone that we're pretty much trading into. We did tap into it a little bit with this nice wick. Yeah, I think there's a very good chance, guys, for us to eventually go bearish from these levels. Now, how can we go ahead and get involved? Well, if we're able to come back up into these extremes, I would be comfortable taking it around here. Right, up in this level. Right, if we're able to see price go ahead and bounce back up, all this liquidity right here that's being built up with this little trend line, this little trend line that a lot of traders are probably throwing on, right? Because traders be throwing trend lines everywhere. Right, I don't use trend lines, guys, like most people. I use trend lines to identify where there's potentially liquidity being built up. Right, so we have this little trend line right here. I think we're eventually going to run this trend line. It's pretty obvious that we probably are. Right, so once we run the trend line and we end up breaking a bunch of structure, right, like even this level right here needs to get ran as well. Once we do all that, then I think, we can go ahead and look for some shorts. Right, so I would be a fan of selling. Right, I would be a fan of selling GU around that 1.24 level. All right, I will start to look for sells around that 1.24100. 1.24100 is where I would start to look for opportunities to go short. 1.24100. Okay? 1.24100. That's where I would like the opportunity to go short on for GU. Now, again, keep in mind, though, I personally wouldn't be trading this tonight, or I'm not going to be trading it tonight, just because, again, like I mentioned, we do have major news coming out. All right, we have CPI in literally just about 3 hours, right? So just be mindful of that. Now, if for CPI, it sends this thing higher up into our kill zone, that could be an opportunity to get in, right? If news pushes us up into there, and then we pause up here, start looking for those opportunities to get in. Now, what I mean by start looking for opportunities to get in, guys, I'm talking about start looking for those change of characters, right? So for an example, right, if we see news push price all the way up here, right, and that's when we go down to lower time frames, right, 1 minute, 2 minute time frames, and we start to wait for that change of character, right? A change of character is something like this. This is what a change of character looks like, right? When we're creating higher highs, higher lows, then we create a higher high that immediately goes from higher high to a lower low, right? You see how that's a change of character, right? Because in an uptrend, the characteristics of an uptrend is what? Higher highs, higher lows, higher highs, higher lows, higher highs, right? That's the characteristics of an uptrend. But when we see the shift, right, this is when we see something like this, where we see the overall previous higher low get completely taken out. And now we have what's considered a change of character, right? And then we can expect the market to go ahead and push back up, get up into our extremes, our supply zone. And then from that supply, we can go ahead and start riding that trade lower, right? But that's what I'm talking about when we get up here, right? When we get up into here, guys, off the 1 minute, 2 minute time frame, just start waiting for that change of character. Right, and the reason why I would say wait, because you never know what news is going to do, right? News could push us up here and just continue pushing, right? Or it can come up to here, and it can also give us that change of character and then start to go bearish. So that's what I would look for, right? I would want to see a higher high going into a lower low, a higher high to a lower low, going from a HL to a LL. That is a change of character. That is what I want to see. And if we get that, then we'll go ahead and take our entry on the, test back up to the supply zone. And then we go ahead and take advantage of that. Right? So that's how I would be trading any of the pound pairs tonight, to be honest with you. All right, so that's where I'm at for GU. Let's go see NJ. We can take a look at NJ. I don't even know when was the last time I even looked at NZDJPY, but we could take a look at it. All right, so NZDJPY, very interesting. Very interesting, right? I mean, I think it's just like most of the yen pairs, where the past, especially the past year. I mean, this has been bullish literally for the past 2 years, right? But especially over the past year, we've seen obviously a lot of strength against the yen just because the Bank of Japan is still behind the ball, right? The Bank of Japan, guys, has been behind the ball this entire year in terms of, what their policies are, right? They're doing the complete opposite of what other central banks are doing, right? While other central banks are tightening, the Bank of Japan is still very much easing, right? They're still printing money every single day, right? They still have literally negative interest rates, right? So they're encouraging, their people over there to actually spend money, right? We're over here, we don't want people spending money, right? We want people to actually stop spending money, right? And that's really what weakened the overall yen itself, right? And I'm still a big fan of this continuing to go bullish. But it's just a matter of seeing where can we actually go to, though. All right, I think there's actually a very good chance. Let me see. Yeah, I think there's an interesting chance of where we're actually at, like where we're actually pushing into. Right, I think there's a very, very good chance that where we're pushing into right now could actually give an opportunity. Right, like somewhere into here might not be a bad play. Yeah. Yeah, this is what I would look for NZDJPY, right? If we're able to come down into this level, into this kill zone, that's where I will start to look for, entries to go ahead and get in. I think there's a very good chance for that to happen. Yeah, I like that. That's where I will be looking for personally, right? I would want to see price come down to this 87 level. And then once we're in that 87 level, I'll go ahead and start to look for opportunities to go long. Right, again, same exact thing I spoke about, right? Look for price action on smaller time frames to give you that change of character, right? Because as of right now, we're going to be creating these lower lows, lower highs, lower lows, lower highs, lower lows. But once we've seen that lower low go into a higher high sequence, that is our change of character. All right, then we wait for price to come back, and then we go ahead and take our entry right here. Right, we take our entry on the pullback. Right, on the pullback. All right, so once we get that change of character, we take our entry once we pull back into that demand zone. Okay, so that's how I would be playing NZDJPY. And GJ, let's go take a look at GJ really, really quickly. GJ, I think, is going to be very similar, right? It is going to be very similar, right? So same thing with GJ. Again, obviously, things could change, guys, depending on news. Just keep that in mind. But similar concept, right? I would love to see GJ come down into this 166,800 level, right around 166,800. I think there's a very good chance that we just end up running these lows right here into that 166,800 level, right? So yeah, if we're able to see price break, I would love to see, come down to here, create these lower lows, lower highs, but then give us that change of character. And then from there, we can go ahead and target back to the upside, right? So that's also how I will be playing GJ going into tonight, right? Looking for some buys around that 166,800. I'll start setting it up and see when we get that shift and then take it something like this. Not bad. All right, I'm actually going to keep this GJ on my horizon, see what we get from that. How we looked at gold. We did look at gold, right? But I'll give you a little quick look at what we were looking at. So for gold, this is what I was looking at for gold. Right, I wanted to see price come and run these highs, right? Capture all this liquidity to the upside before we go ahead and start targeting all the liquidity to the downside, right? So I'm a big fan of looking for shorts around 18.19 is where I will be looking, where I will start looking for opportunities to go short, right? Around 18.19, around 18.19. That's where I will start to look for opportunities to go short. Okay, same concept. We wait for price to get up there. Right, look, we're creating higher highs, higher lows. Once we get that change of character, bow, and then we can go ahead and get it. Bow. All right, very simple, something like that could be a potential play. All right, but besides that, though, family, right, I do appreciate y'all for rocking with me tonight, man. I feel like I haven't been on live with y'all in a while, but I just was with y'all last week. At least not on this channel, right? I wasn't live on this channel at all, I don't think, last week. Yeah, I don't think I was live last week at all on this channel, unfortunately. But I am back, right? I'm back live with y'all, and I will be continuing to be live with you guys during Asian session to continue to give you guys this value, these nuggets, these gems, and just continue to help you guys out tremendously. Let's see. Are you going to show up to the June FX Summit 2023? Yes, I am. All right, shout out to my guy, Roy. Yeah, I will be there, right? I'll actually be teaching as well, at least be on stage, right, which is going to be fire, right? So big shout out to you guys that are actually going to be there as well, but yeah, the FX Summit is going to be a vibe. Once more details comes out for that, obviously I'll be promoting it to you guys, and yeah, I want to see the whole Profit Society, the whole family there, just show up and gain some value from all the traders that are going to be there. All right, but family, I do appreciate you guys. I love you guys so much for rocking with me tonight. Thank you guys for being on. I am going to be live again tomorrow morning with the team on the Profit Society channel. And we also will be live tomorrow as well for news, right? So I look forward to seeing you guys all tomorrow for New York session trading live and for news as well, so we can analyze what the hell is really going on, right? But in the meantime, in between time, I appreciate y'all. Thank you guys for rocking with me tonight. And I will see you guys all tomorrow morning. Let's get it, y'all. Have a great rest of your guys' day. Let's get it.
Sound production. Sound production.